Okay, good evening everyone. Welcome to Byju's Exam Prep IAS. This is Sham Kagod here. Now, before I start the discussion, if there is no issue with the sound, please give me a thumbs up. Okay, some of you are saying good afternoon. Two of you are saying good afternoon. My dear, it's good evening. Okay, so 5 o'clock, good evening. Okay, so let's start. Before I start the discussion from where we left off, that was basically the concept of uh, the Basel guidelines. I just want to again, basically the concept of the newspaper reading, right? What is the importance of newspaper reading? I just want to give you certain glimpse of what important articles have come, again, out of many important articles. What kind of important articles have come today, and are they relevant to what you discuss in the classroom, etc., etc. Now, Article 1, this appeared in today's Economic Times. Please have a look at the Article 1 here. It is regarding the deputy governors. It is regarding the deputy governor. And if you read the article, you will realize that we have discussed all of this. There are 1 plus 4. The composition is very simple, 1 plus 4. Right? There are 4 deputy governors. And out of the 4 deputy governors, right, one of the deputy governors is retiring. And for this purpose, basically, right, we need to have one more RBI deputy governor. And I told you, I hope remember this, the deputy governor, the governor of RBI, etc., etc., right? All of this is appointed by Government of India, and you will also see the same thing being discussed here. The finance sector regulatory appointments, right? The search committee, which is headed by the cabinet secretary, Government of India, right? Basically, this is the authority which will give the recommendation. Government of India will appoint him. That is the basic first article that I want to discuss. Second one, today we'll have a discussion regarding payment banks. Today we'll have a discussion regarding payment bank, and the article is discussing the idea of a payment bank, right? What has happened regarding the payment bank, etc., etc. Right? Only 3 payment banks very recently have started performing well. They have reported profits, etc., etc., etc. Today we'll have a discussion. Please don't worry. Okay. Now, apart from this, right? Please have a look at it. Last week, if you remember, last week, if you remember, I told you regarding the RBI functions, the functions of RBI. And one of the functions of RBI was RBI will try to basically, right, ask the banks to follow all the guidelines that are there for Reserve Bank of India. And if you do not follow these guidelines, RBI will impose penalties. Right? What are the 2 tools? Right? I hope remember the names of the 2 tools. First one was basically moral suasion, and after moral suasion, right, then basically the second one, that is a direct action. Have a look at this article, and some of you might be asking, sir, where it has come, etc., etc. It was there Saturday. It was just Saturday's newspaper. RBI, sorry, a second article. RBI slaps 84.5 lakh rupee penalty on a central bank. Now, should you by heart the number? Should you by heart which bank it is? Not at all needed for UPSC. You don't have to require everything for UPSC. Right? Basically, it is one of the tools used by RBI. Now, we'll have a discussion regarding the concept of cooperative banks. Regarding that, on Saturday, there was one more article. RBI OK's Maratha Cosmos Bank merger. And have a look at this. RBI's decision. We have discussed this in the classroom. I said RBI basically stated the 2000 rupee note that is being done, or the case of 2000 rupee note withdrawal, RBI simply says it is one of the exercises of RBI. I hope you remember that discussion. It is one of the exercises that is conducted by RBI under the concept of clean note policy. And I told you, because RBI has clearly stated deposit the money until the end of September 30th, you can use it as a mode of a transaction in the market. That is, it will still remain a legal tender in the market till the end of September 30. And I told you, because of this, you cannot simply call this withdrawal as a demonetization. That is what it was done back in 2016. That is exactly what RBI has given in the form of a statement. Again, this was there in the newspaper, in Indian Express. Right. So that's the reason. This is my sincere advice to all of you. Sincere advice, or let's say take it as a request as well. Please do not stick to only one newspaper for Indian economy. right? Please do not stick to only one newspaper for Indian economy. And if you do that, trust me, when you solve the question paper, let's say directly the UPSC paper, you will realize that a large number of questions have come out of Hindu newspaper. And that's the reason. Try to add more and more current affairs. Okay, now with this caveat, let's continue. What we are discussing? We are discussing the Basel guidelines, right? What is the concept of Basel guidelines? Under the idea of a Basel guidelines, right? Or before that, what we have discussed? We discussed other functions of Reserve Bank of India. Other functions of Reserve Bank of India. What are the other functions of Reserve Bank of India? One, other functions to maintain forex reserves, right? Under forex reserves, there are four components: gold, right? Foreign currency assets, right? Etc. Etc. And I've not discussed two of the components. I hope remember that as well. I said we'll discuss SDR, right? Special drawing rights when I take up IMF. And I also told you we'll discuss the concept of reserve tranche, gold tranche when I take up IMF. So forex reserves, who is the custodian of forex reserves in India? RBI. Who is the banker to the banks in India? Reserve Bank of India. Who is the bank of last resort? Reserve Bank of India. Who is the regulator of banking sector in India? Again, RBI. In addition to this, we discussed the idea of a reserves or surplus transfers to Government of India by RBI. We discussed a concept of DICGC, Deposit Insurance Credit Guarantee Corporation. Right, again, one more subsidiary of Reserve Bank of India. And after this, we started with the idea of a Basel guidelines. Basel guidelines. And what we have discussed last week before we finish the class, what is the basic idea of a Basel guidelines? That is certain important concepts in the Basel guidelines. Now, the concepts that we have discussed is, right, the total capital held by the bank. Point number one, total capital held by the bank. And what is the total capital held by the bank? Total capital held by the bank is generally divided into two parts: tier 1 capital and tier 2 capital. And I said tier 1 capital is more reliable for the bank compared to tier 2 capital. I repeat, tier 1 capital, the banks rely more on this compared to tier 2 capital. And just for sake of understanding, I gave you example for tier 1 capital as well as a tier 2 capital. Example for tier 1 capital is additional tier 1 bond, AT1 bond. Okay, AT1 bond. And the example for tier 2 capital is tier 2 bonds. And what I said was, in case of additional tier 1 bond, banks issue these bonds, collect the money, but the banks will decide when the bonds will be repurchased and the money will be given back. And I basically stated that because the banks are deciding when to return the money back, in certain situations, the banks can simply not pay any coupon amount to the investors. And the banks may also decide not to pay the principal back to the investors. That is basically the idea of an additional tier 1 bond, AT1 bond. And what about the tier 2 bonds? Both tier 1 as well as tier 2 bonds are unsecured bonds. Unsecured means what? There is no security or a collateral attached to the idea of a bond here. Both are unsecured. But the important difference between tier 1 and tier 2 bond is that in case of tier 2 bonds, what is the maturity period? What is the maturity period? It is announced by the bank. Before issuing the bond, the bank simply says, this is the maturity period, 5-year, 10-year, like this. That is basically the concept of the AT1 bond and tier 2 bonds. These are components of total capital held by the bank. And I told you the reason why the banks are supposed to hold capital is the banks might incur a loss, right? The banks have collected deposits of customers. Banks might incur a loss. In order to address the losses incurred by the banks are supposed to hold capital. Now let me go to the next idea within Basel guidelines. There are three types of risks which are faced by lenders or creditors in the market. One is called as a credit risk. Second one is called as a market risk. Third one is called as a operational risk. Let's go one by one. Have a look at this. Credit risk means it is the potential that the bank borrower will not repay or will fail to meet obligations in accordance with the agreed terms. Now, what is this? Let me explain this. Imagine you're a bank. I will come to you and I'll take a loan. Done? A customer will come to the bank and customer will take a loan. Now, when the borrower or the customer will take the loan, is it okay when I say there is an agreement or a contract between lender and borrower? As per the agreement, the borrower, that is a customer, is supposed to make a payment, let's say, before 5th of every month. Before 5th of every month, the borrower is supposed to make a payment of, let's say, 20,000 rupees every month. Now, what if I take a loan and I will stop making repayment to you? Simple. You're a bank. I've taken a loan and after certain time period, I will not make any payment to you. Now, please tell me, right, is it a risk to you or not? Point number one. Is it a risk for you? Yes or no? Please do let me know. And point number two, if I stop making a payment to you, will you incur a loss or not? Done? Right? Both the points are clear. That is called as a credit risk. That is basically called as a credit risk. All the creditors in the market will face credit risk. Point one. Second one, market risk. Idea of a market risk. The risk of losses arising from movement in market prices. Now, let me give you a very simple example. Imagine you're a bank. You will purchase a bond in the market. You will purchase a bond in the market. Now, when you purchase a bond in the market, let's say the price of the bond is 110 rupees. 110 rupees. Now, after a certain period of time, you will sell the bond in the market. What if the price of the bond has fallen down to 105? A simple question to all of you. By purchasing at 110, selling it at 105, have you incurred a loss or not? Simple idea. Have you incurred a loss or not? And those who are asking, sir, will it happen? My dear, bond prices are changing in the market. I hope you understand. Bond prices are not stable. Bond prices will keep on changing in the market. And when the bond prices will change, imagine you purchased at a higher price, you sold it at a lower price. Is it not a loss for you? Can it happen in multiple types of assets where you have invested? Of course, the answer is yes. Right. So, second type of a risk that the creditor takes here is the market risk. Third one, operational risk. Third one is operational. It is also referred to as a systemic risk. Operational or systemic risk. What is this operational or a systemic risk? It is the risk of losses which the bank might face, which are as a result of internal processes, people, systems, right, or even external events. Let me give a very simple example. Imagine I'm a cashier. You will come to the bank. You will give me, let's say, a full bundle of 2000 rupee currency notes. Right, I'm taking current affairs so that you can understand it. Imagine I'm a cashier. You will come to the bank. You will give me a full bundle of 2000 rupee currency notes. Right, I'll keep on counting because the queue is very long. People are still waiting. I'll have to provide services to them, etc. What if out of all these currency notes that you have given to me, one is a fake currency note, one is a counterfeit, but I'll not be able to find out. I'll simply take all these 2000 rupee currency notes. Now, please tell me, will that 2000 rupee currency note, which is a counterfeit, fake currency note, is it a loss for the bank or not? Is the logic okay with all of you? Is the logic okay or not? Please do let me know. So whatever I'm saying here is the banks will face three types of risks. And these three types of risk are generally classified into one, credit risk, where the borrower will take a loan and will not repay the money. And that is basically a loss. Market risk, where investments have been done by the bank, and whenever the market movements will happen, the banks might incur losses because of this. And the third one is operational risk, where people who are involved, machines are involved, processes are involved, and because of these, right, plus external events, banks might incur a loss. These three are basically the risks faced by the bank. So first concept that we have discussed in the Basel is the total capital. Second one is the risk faced by the bank. Let me go to the third very important concept, idea of risk weighted asset. Concept of risk weighted asset. Now let me start with very simple example. Imagine here is a bank. Imagine here is a bank. The bank will give loan to two types of borrowers. I'll take a simple example. Let's say one for real estate project, second one to the government of India. Understand this. A bank, you are the bank manager, by the way. You will give one loan to real estate project and second loan to government of India. Point number one, can I call both of these as assets? Right? Go by point wise, automatically understand. Right? Can I call both of them assets? Yes. Point number two, don't you think whenever a bank will give a loan, there is a risk involved related to this loan? There is a risk involved related to both of the loans. Just now we have discussed. Point number three, in these two examples, do you think both the loans will carry the same amount of risk? That's a point number three. In this, two loans are there, two assets are there. Do you think both the assets will carry the same amount of risk for the bank? Of course, no. Right now, can I simply say that the bank gives a loan to government of India? This will carry absolutely very, very low amount of risk. In fact, in many cases, can I say this will carry 0% risk? Let me know. This will carry, right, very, very low, 0% risk. Because, right, again, please understand, sir, why are you giving 0%? You please tell me an example where government of India has taken a loan, has not repaid the loan. I hope you understand the statement. Where government of India has taken the loan and government of India says, sorry, I don't have money to repay. You will not get that example. Don't waste your time. But on the other hand, can I say that real estate has very high risk? The loan given to real estate contains a very, very high risk. Now, when I say 0% risk and very high risk, right, can I give certain weightages here? Weightages simply means if I give, let's say, 100 rupee loan to real estate, there is a possibility. There's a possibility that maybe, let's say, 70% of the loan will not come back. If I give 100 rupee loan to government of India, 0 rupee, there is a 0 rupee chance, or let's say there is a 0% chance that none of it will be given back. All the money will be given back by the government of India. This is basically called as risk weightage assets. Can you go to the next point here? This is basically called as risk weighted assets. What do you mean by risk weighting here? I am allocating certain risk to different types of investments bar loans which are issued by the banks. That is the concept of risk weighted assets. Now, many of you will ask me, sir, why? Why should we allocate risk weightage like this? If you have a risk weightage, basically the argument is there is a probability that you will incur certain amount of losses. Simple idea. There's a probability that you might incur certain amount of losses. That is a precise reason we allocate certain risk weightage. Let me give a very simple example here. Please do not by heart the table. For UPSC, this table is absolutely useless. Absolutely useless. Have you seen yesterday's question paper? Tell me anywhere calculations have been asked. Tell me anywhere can you see a calculation being asked by UPSC? Absolutely no. Now, come back to the discussion here. Imagine 3 loans are given by a bank. Okay, 3 loans are given by bank. And the loan value 1 is 50,000 rupees. Loan value 2 is 30,000. Loan value 3 is 20,000 rupees. Now, have a look at this. Risk weightage of 0%. Sir, why have given 0%? Imagine this is given to Government of India. Simple. Imagine this loan is given to Government of India. Loan 2 is given to, let's say, certain industry. And loan 3, imagine it is given to real estate project. Obviously, a real estate project is much more risky. I've given a weightage of 80%. Now, before going forward, This is just a hypothetical calculation. Can you understand the term hypothetical? Imaginary calculation. Because under Basel guidelines, different assets are given different weightages. Should you remember all of it? Absolutely no. Do not waste your time. You don't have to remember all of it. So let's say 50,000 loan is given to the government, 0% risk, which means risk weighted asset will be how much? 0 rupees. And second, loan 2 is given, 30,000 rupee is given, and the weightage is 50%, which means 15,000, 15,000, right, will be a risky asset here. And loan 3, 20,000 rupee loan has been given, 80% is risky, 16,000 is right, a risky loan. Any problem with the calculation? Any problem with the calculation? And again, even you want to by heart it, don't by heart it, it is not required. Now can I simply say, out of the total assets held by the bank, 31,000 rupee worth of the assets are risky assets. Out of the total assets of 1 lakh rupees, 30,000 rupees are risky assets for the bank. Now, why should we calculate all of this? Last point under the basics, we need to calculate a new number or a one parameter under the Basel guidelines called as capital adequacy ratio. CAR, capital adequacy ratio, or else it is also referred to as capital to risk weighted assets ratio. Right, so what is this idea of a capital adequacy ratio or CRAR? Let me explain this. Imagine a bank has given 100 rupee risky assets. I'll repeat. Imagine a bank has given 100 rupee risky assets. Can there be a loss because of this? Let me know. Point number 1. A bank has issued 100 rupee risky asset. Can there be, again there is no guarantee, but can there be a loss because of this? Of course, yes, there can be a loss. Now, if a bank is going to incur a loss, how much capital, what should be the minimum capital that should the bank be maintaining? I repeat it. Because the bank has certain risky asset, there is no guarantee, there could be certain losses incurred by the bank. In order to absorb these losses, in order to address the issue of losses, what should be the minimum amount of capital the bank should maintain? That formula is called as capital adequacy ratio or capital to risk weighted assets ratio. And how do I calculate this CRAR? CRAR formula is total capital in the numerator divided by risk weighted assets. I would recommend please by heart this formula. This is my recommendation to you. I would simply recommend please by heart this formula. And when I say something, simply by heart it, please by heart it. If you don't trust me, many of you are from the previous batch. Please tell me, when I was discussing 15th Finance Commission, did I request you to simply by heart the table of horizontal devolution or not? I hope you remember that in the previous batch, and based on the names, I can realize, okay, many of you are from the previous batch. I simply told the students, by heart horizontal devolution formula. Beyond that, nothing else is required in Finance Commission. And yesterday, the same table was asked by UPSC. That's the reason. Again, I'll tell you a simple idea. Don't by heart everything, but when I say by heart something, simply by heart it. So what I would simply recommend is by heart this table. Total capital divided by risk weighted assets into 100. That is the capital adequacy ratio, and which means what should be the minimum amount of capital which should be maintained by the banks in order to absorb the losses because the banks have risky assets. That is basically the concept of capital adequacy ratio. Now let me ask you a very simple question. Imagine Bank A has a capital adequacy ratio of 10%. Simple question, think of it. Imagine Bank A has a capital adequacy ratio of 10% and Bank B has a capital adequacy ratio of 13%. Now, which of these two banks do you think is more stable? I hope you understand this. Right? Bank A has a capital adequacy ratio of 10%. Bank B has a capital adequacy ratio of 13%. Right? Which of the two of these banks do you think is more stable in order to absorb the losses? It has to be B. It has to be B. Right? Any difficulty? Some of you are saying A. My dear, A has, what is the meaning of it? Let me put it in numbers. 10%, can I write it as 10 upon 100? And B, 13%, can I write it as 13 upon 100? Which means, in case of these two banks, if risk-weighted assets are 100 rupee, Bank A has a capital of 10 rupee, Bank B has a capital of 13 rupees. Don't you think 13 rupee is more than 10 rupee to absorb losses incurred by the bank? I hope you understand. Right? 13 rupees more than 10 rupee to absorb the losses incurred by the bank. Of course, yes. That is the reason I said higher the capital adequacy ratio, RBI will not be concerned about such banks. But imagine one bank is there. In, let's say, last year for the bank, capital adequacy ratio was 15%. This year, it will fall down to 13%. Next year, it will fall down to 8%. Should RBI be concerned about this bank? Think of it. Will RBI be concerned about this bank? Of course, yes. Of course, yes, RBI will be very much worried about this bank. Why? Continuously, the capital adequacy ratio is declining. CRAR is declining, which means the capacity of the bank to absorb losses is continuously decreasing. That is whole idea of capital adequacy ratio or capital to risk weighted assets ratio. Okay. Now, these are the various concepts. Let me enter into the basic idea. Again, tier 1 capital, just for sake of understanding, I've given a calculation. Do not by heart it. Please do not by heart any calculations. Right? Tier 1 capital is 2000. Tier 2 capital is, let's say, 1000 rupees. Total capital will be 3000. Risk weighted assets are, let's say, 31,000. Then capital adequacy ratio will be how much? 3000 divided by 31,000, 9.67%. Okay, that is basically how the calculation is done by RBI. You don't worry. Don't by heart calculations. Now, let me go ahead. Let me enter into the idea of Basel now. So far, what I've told you is basics of Basel. Now, what is the use of the basics? Let's try and understand. Point number 1. Many of you are asking, sir, please give me expansion of Basel. Tell me, define Basel, etc. My dear, Basel, it is name of a city in Switzerland. I'll repeat the statement. Basel, it is name of a city in Switzerland. Basel is not an acronym. Just like we have cities in India, Jodhpur is there, Jaipur is there, Delhi is there. I hope you understand. Bangalore is there. So in the same way, in Switzerland, there is one place, one city. The name of the city is Basel. Now, why do we call this as Basel guidelines? In the city of Basel, there is one institution, Bank of International Settlement. BIS, Bank of International Settlement. And within the Bank of International Settlement, India is a member of it. There is one committee within the Bank of International Settlement, which is referred to as Basel Committee on Banking Supervision. I repeat, within BIS, BIS is an institution. Within that, there is one committee, Basel Committee on Banking Supervision. And what is the role of Basel Committee on Banking Supervision? In order to maintain the stability of the banks. Remember this. In order to maintain stability or health of the banks, this Basel Committee will keep on issuing guidelines. Is the logic okay? I'll repeat it. What is the role of the Basel Committee on Banking Supervision? The expansion itself will tell you what is the role of it. The role of BCBS is every now and then, in order to protect health of the banks, in order to basically maintain the stability of the banking sector, this committee will keep on issuing guidelines. So far, 3 rounds, 3 sets of guidelines have been issued. And these are very famously referred to as Basel 1, Basel 2 and Basel 3. India, right, understand this. In India, we have implemented Basel 1 and Basel 2. We are in the process of implementing Basel 3. Now, next important point, whatever guidelines have been issued by the Basel Committee, the central banks, I repeat, the central banks have the authority to change the guidelines. And that should be very, very much self-explanatory to you. I'll repeat the statement here again. Whatever guidelines have been issued by the Basel Committee, the central banks, for example, in case of India, Reserve Bank of India has the power to change, tweak the guidelines issued by the Basel. The reason is very simple here. Do you think the guidelines should be same for US banks and Indian banks? Think of it and let me know. Do you think it makes sense to you? The guidelines should be same for US banks and Indian banks? Of course no. So that's the reason the guidelines have been announced, but RBI wants to change them. RBI wants to change the number, certain change in the guidelines. RBI is allowed to do that. I'll give you an example, have patience. For example, have a look at this. Under Basel Committee on Banking Supervision, the Basel 3 guidelines, the capital adequacy ratio, CRAR, should be 8%. I repeat, as per the Basel 3 guidelines, the CRAR should be 8%. RBI says no, we will not stick to 8%. We'll simply keep it at 9% for banks in India. I'll repeat the statement again. As per Basel 3, it says CRAR should be 8%. RBI says no, we'll not keep it at 8%. We will keep it at 9%. In fact, within the banks also, for some banks, we'll keep it at 9%. That is scheduled commercial banks, we'll keep it at 9%. For public sector banks, we'll keep it at 12%. For payment banks, we'll keep it at 15%. 15%. So what I'm trying to say here is very simple. These are the guidelines. These are certain recommendations which have been provided. The central banks are supposed to implement them. But the central banks also have the freedom to tweak or change these guidelines as per their requirement. Now, Basel 1 guidelines was announced in 1988. Government of India, or let's say to be more precise here, RBI, Reserve Bank of India, has already implemented these guidelines by 1999. Under Basel 1 guidelines, they identified one risk faced by the bank. Let me know, did we discuss this or not? Under Basel guidelines, we identified only one risk will be faced by the bank, that is a credit risk. And because there is a credit risk and there is a probability of losses arising because of the credit risk, right, we introduce the concept of risk-weighted assets, idea of a RWA. And in order to protect the banks from the losses being incurred, under Basel 1 guidelines, the capital adequacy ratio was 8% of risk-weighted assets. Right? The capital adequacy ratio was fixed at 8% of RWA. Can I go to the next one here? Can I go to the next one? Right? This is Basel 1. Did we implement it? Of course, yes. We have implemented the Basel 1 guidelines. Basel 2. The concept of Basel 2 was introduced in 2004. But under the Basel 2, we expanded. We did not cover only the credit risk. We expanded and introduced the concept of the 3 types of risk. Have a look at this. 3 types of risk. One is basically the concept of credit risk. Second one is a market risk. Third one is a systemic risk. First one is a credit. Second one is a market. Third one is systemic risk or operational risk. We have discussed all the 3. Don't say when. 15 minutes ago, we started with the same idea. We have discussed all the 3. That's the reason I started with the basics. Now, right, directly into Basel guidelines. Now, because you are going to face the risk, there could be losses by the banks. In order to overcome this risk, we proposed a concept of 3 pillars. 3 pillars means 3 categories. 3 pillar solution was recommended. What were the 3 pillars? 1, have a capital adequacy ratio. Have capital adequacy ratio, CAR. As usual, in Basel 1 also it was there. Basel 2 also it is there. Basel 3 also it is there. Capital adequacy ratio is continuously there. So first one, capital adequacy ratio. Right. Second, supervisory review. And the third one is market discipline. Now, what is this meaning of the term supervisory review? Right. Let's say you are a manager of a bank. Understand this. You are a manager of a bank. Now, you know that you as a manager or your bank is going to face market risk, operational risk, and a systemic risk. Will you implement certain policies to minimize the risk, or you will allow the risk to convert into losses? Think of it. I'll repeat it again. You are a manager in a bank. Will you implement certain policies, certain systems in the place will you put it so that you will minimize the risk, or you will simply allow the bank to incur losses? Don't you think you will try to implement policies? You will try to implement certain systems so that the risk will be minimized. Automatically, the potential losses will also be minimized. That is supervisory review. The banks need to develop better risk management techniques to monitor and manage all the three types of risks. And the third one, right, market discipline. Many of you keep on asking me, sir, how will RBI come to know what a bank is doing? Very valid question. How will RBI come to know what the bank is doing? The bank might simply say we will follow it, but they will never follow it. And if you remember, one of the articles that I've shown you, right, in today's PPT was RBI has imposed a penalty on one of the banks. Now, again, the question is, how will RBI come to know? For any of these, how will RBI come to know? RBI has put in place systems wherein the banks will have to continuously keep on reporting, that is giving data to Reserve Bank of India. Simple idea, right? The banks will have to keep on reporting the data to Reserve Bank of India. And if RBI finds that you are not abiding by these guidelines, automatically RBI will impose penalties on you. Now, that is basically the concept of market discipline. That is, right, have a look at this. Requires under the market discipline, all the banks will have to make more and more disclosures to the central bank. The banks will have to disclose what is their capital adequacy ratio, what is their risk exposure, etc. to the central bank. Banks will have to keep on reporting this data continuously on a continuous basis or a regular basis to Reserve Bank of India. That is called as a market discipline. Can I go to the next one here? Let me know. Can I go to the next one here? So argument is simple. Right? There was one question, sir, why? What is the need for Basel 2? My dear, don't you think what was the situation in the banking sector in 1988 would be different back in 2000? Think of it. Basic idea. Sir, why should we keep on implementing, right? Keep on revising these Basel guidelines? What was the situation in the banking sector back in 1980s is different compared to 2000. And can we also elaborate and extend the same argument? What is the situation in the banking sector in 2010 is different compared to 2000? Wasn't there certain crisis in 2008 in the global market? Do you remember that? In 2008, wasn't there a crisis in the global market? Weren't the banks affected? Of course, yes. That is the precise reason every now and then we'll keep on revising these guidelines. Right? So, introduced in 2004, three types of risk. All the three we have already covered. And three pillars: maintain capital adequacy ratio. Second one is supervisory review. Develop certain systems or techniques to minimize the risk. And the third one, keep on submitting the data, updating the central banker regarding this. Okay? Right? That is market discipline. So, three pillar approach was followed. Now, Basel 3 was announced in 2010, and you already know what was the reason. I hope you understand. You already know what was the reason. I told you 2008 global financial crisis. So because of global financial crisis, many banks were reason for it, and many banks were affected because of it. So in context of that global financial crisis, one more set of guidelines were announced by the Basel guidelines or Basel Committee on Banking Supervision. we are in the process of implementing these. Understand this very carefully. Point number one, we continued with the three types of risks. We basically said, okay, there will be three types of risk that the banks will face, right? The same three types of risk have been continued. Second, we also continued the concept of three pillar approach. We also continued with the concept of three pillar approach. What are the three pillars? One is capital adequacy ratio. Second one is basically supervisor review or before supervisor review, and third one is market discipline. So three types of risk again carried forward, three pillar model carried forward, and right within this, these are the important points. Let's start. The capital adequacy ratio should be minimum 9%. Minimum 9%. And within this also, I'll tell a point here. Scheduled commercial banks, capital adequacy ratio should be 9%. For public sector banks, it has been kept at 12%. And for payment banks, which we will discuss later, it has been fixed at 15%. Third point, within the capital adequacy ratio, the tier 1 capital should be at least 7%. I'll repeat it. Within the capital adequacy ratio, the tier 1 capital should be at least 7%. And I hope you understand why we require more of a tier 1 capital. Is the logic okay with all of you? Tier 1 capital is there, tier 2 capital is there. Do we need more of a tier 1 or tier 2 capital? Argument is tier 1 capital is more preferable for a bank and more reliable for the bank, and that's the reason we prefer more and more tier 1 capital, at least 7%. Next one, capital conservation buffer. Idea of capital conservation buffer. And what is this idea of a capital conservation buffer? Let me start with the last term here, buffer. Now, whenever you come across the term buffer, right, day-to-day terms, whenever you come across the term buffer, buffer simply means extra, right? Addition, in addition, something extra, buffer. Now, let me start with a very simple example. All of you have a wallet. Again, UPSC will not ask you this. I am trying to make you understand. All of you have a wallet, purse. Wallet simply is purse. Now, tell me honestly, don't you think at least most of you, whatever amount of money you have in the wallet, you will take one currency note out of it. Let's say 500 rupee, not 5,000, 500 rupee note. You will fold it and you will keep it in a secret compartment in the wallet. Am I correct or not? Tell me. You will take a 2000, no 2000 rupee note, 500 rupee note. You will take one 500 rupee note, you will fold it very nicely. Will you keep it in the secret compartment or not? And if I ask you why, even I do that, by the way. If I ask you why, your answer will be very simple. Sir, there could be certain emergency in the future. There could be certain emergency. Or there could be a situation where I've forgotten to withdraw money from the ATM and I'm running out of cash in the purse. So suddenly I'll remember that, okay, there's a secret compartment, 500 rupee note is there, you will take it out, start spending it. This is basically the idea of a buffer to you. Can I give you one more example? Some of you are saying, no, I will never do that. Of course, today with the idea of a digital payment, this model of keeping buffer has become redundant. But can I give you one more example? Especially in lower income household and middle income household, what do you think mother will do? Think of this. What do you think your mother will do? Or even your spouse? If you give, let's say, 10,000 rupees for taking care of house, some amount of money out of that, let's say 2,000 rupee or 1,000 rupee, they will save it and they'll put it in, let's say, sugar box. They'll put it right in some other box which is not usually used by others, not touched by others. Or they will find out a remote place, right, in a particular bureau, that is cupboard, and in one corner they'll push it like this. Yes or no? Right? Why? What is the reason? The reason is again simple. Buffer. In case of emergency, right, we will require it, etc., etc. Now, you don't require all of this for UPSC. come to the bank now. The bank has certain capital. Let's say the bank is holding a capital of 2 crore rupees. The bank is holding a capital of 2 crore rupees. For what reason? To absorb losses. Tier 1 plus tier 2, the bank is right now, let's say, holding 2 crore rupees to absorb losses. But what if there is an emergency in the market? There is certain situation that has taken place in the market. As a result of this, losses of the banks are very high. Losses incurred by the banks are very high. Now tell me, will this 2 crore rupees be sufficient to absorb the losses? Don't you think? I hope you understand the point here. Will the 2 crore rupees, that is actual capital of the bank, will it be sufficient to absorb all the losses? No. That's the reason the banks will also be asked to maintain additional capital, extra capital, and this is called as a capital conservation buffer. Any difficulty in understanding this? Right? Any difficulty? So as usual, you are supposed to maintain 9%, but again from one bank to another bank, that is also different. And in addition to the capital that you maintain, you'll also have to keep extra capital in case there is emergency. You can use this capital, right? So banks must build these reserves which are to be used in the future, and this has been fixed at 2.5%. And these reserves are built during normal times and used during the periods of emergency, that is stress. Can I go to the next one? Right, this is called as a capital conservation buffer, CCB. Liquidity coverage ratio. Idea of liquidity coverage ratio. Now LCR, what is this liquidity coverage ratio? Let's start, right? Understand the examples, automatically understand the importance of this. Here is a bank. Okay, here is a bank. A customer will come to the bank and keep a deposit of 1,000 rupees. A customer will come to the bank and keep a deposit of 1,000 rupee. Now the bank will take the 1,000 rupee and, right, let's say hypothetically, part of it will keep it in the form of reserves, and remaining amount they will lend it in the market. This is exactly what the bank does. Maintain reserves and remaining amount use it for lending activity or invest in the market. Now let's say after 1 week, the customer will come to the bank. The customer wants to withdraw the 1,000 rupees back. Customer has deposited 1,000. Customer wants to withdraw 1,000. Now please tell me, does the bank have 1,000 rupee to repay the customer here? And that is cash, by the way. Does the bank have cash of 1,000 rupee? Again, some of you saying yes. How? I don't know. Right? You think of it. Does the bank have a cash or assets of 1,000 rupee to repay the loan? I'm sorry, repay the deposit? Of course no. Some of you saying yes. Why telling? You tell me. How? What is your calculation? Imagine, right? This is what I'm trying to tell you. You have given a loan of 600 rupees to me out of this. You are the bank, by the way. You have given a loan of 600 rupee and 400 rupee you are maintaining in reserves. Your customer will come to the bank and the customer wants to withdraw 1,000 rupees. Tell me, from where will you get the 1,000 rupees? In this example, do you have 1,000 rupees? No, my dear. No, you don't have 1,000 rupee. And that is the precise reason what is done under the Basel is, there is one ratio called as liquidity coverage ratio. Liquidity coverage ratio, LCR. What is this idea of a liquidity coverage ratio? A bank is supposed to estimate, underline the term estimate. The bank is supposed to estimate in the next 30 days how much will be the total money flowing out of the bank. Outflow of money. I'll repeat it again. The bank is supposed to estimate for the next 30 days how much will be the total outflow of money. And whatever is the number, let's say this bank calculates, estimates for the next 30 days, they estimate that 50 crore rupees will flow out of the bank. Then as per the liquidity coverage ratio, whatever is this estimate, same value, or can I simply say 100% of it, 100% of it, they will have to maintain in the form of high quality liquid assets. HQLA, high quality liquid assets. Now, what is the importance of this? Do you remember the concept of liquidity? Think of it. Do you remember the concept of liquidity or not? Right? What is this idea of a liquidity? Liquidity simply is a feature of an asset which represents how quickly, how soon can you convert this asset into money. That is basically called as liquidity. Now think of this and tell me. I'll give you an example. Think of this and tell me. Imagine a bank is there. It has given loan to a customer. It has given a loan of, let's say, 1,000 rupees to a customer. I'll call this as number one. Bank has also invested and purchased a bond in the market. It has purchased a bond in the market worth 1,000 rupees. I'll call this as 2. Simple question to you is, which of the two do you think is a high quality liquid asset? Is it 1 or is it 2? I've given you 2 examples. One loan and one bond. Which of the two do you think is a high quality liquid asset? My dear, some of you are making a mistake here also. Most of you are correct. Some of you are still confused. It should be B. It should be the second one. Second one, not the first one. How? How first one will be correct? You tell me. Loan, right? And bond. You have a bond worth 1,000 rupee. Can you sell it in the market, get the money or not? You tell me. Can you simply sell this bond and get the money from the market? Of course, yes. On the other hand, loan. You have given a loan of 1,000 rupee for 5 years. Can you come to me and ask, I want money, give it back to me now? Will that work? Will that work to a customer? Can you give a loan of 30 years and ask the customer to pay back after 1 year? No, customer says, look at the agreement. I've borrowed for 30 years. So that is the whole idea. Bond is more of a high quality liquid asset. What about the cash deposits done by other customers? What about this? The cash deposits are done by other customers. Sir, how can I use this? I'll give a very simple example. Imagine I'm a customer. You want 1,000 rupees to pay to other customer. I will bring 2,000 rupees and deposit with you. Can you use that and pay back the second customer? Of course, yes. That is what the banks generally do. So in this example, can I say 2 and 3 are high quality liquid assets, whereas 1 is very, very low quality liquid asset. Now, what is the whole idea? Please have a look at it. The banks are supposed to estimate in the next 30 days how much will be the outflow of money from the bank. 100% of it they will have to maintain in the form of high quality liquid asset. For example, they are supposed to hold government bonds, they are supposed to hold cash, and whenever the money is required, deposits are being withdrawn, they can simply sell these assets. For example, government bonds, they can simply sell it in the market, get the money and use it for allowing the withdrawals to take place. That is basically the concept of liquidity coverage ratio. Any problem? Shall I go to the next one? Liquidity coverage ratio. And in case of India, what is the liquidity coverage ratio right now? 100%. Liquidity coverage ratio is simply 100%. Right? That is next 30 days, if your estimate is 50 crore, the HQLA that you're supposed to maintain is equal to 50 crore. And let me ask you a very simple question. Since I've written government bonds here, think of it and answer. Will SLR be counted as a part of LCR or not? I'll repeat the statement here. Think of it, it is right, basically an inference. One of the components under the HQLA is government bonds. Now my question is, because government bonds are part of HQLA, will the SLR, what is SLR? Statutory liquidity ratio. Whatever government bonds you have purchased in the SLR, will it be counted as a part of LCR or not? Answer is yes, by the way. Answer is simply yes, my dear. Answer is yes. Right? Why? Some of you are saying no, sir. Right? Tell me why. Argument is simple. What do you do in SLR? Go back to what we have discussed. What do you do in SLR? As a bank, certain percentage of the NDTL, net demand and time liabilities, you will have to maintain with yourself. You'll have to maintain with yourself, either in the form of cash. Is cash part of HQLA? Yes. Or in the form of gold? Tell me, gold is a high quality liquid asset or not? And third one is approved securities such as government securities, right? So all of them are counted as a part of HQLA. And some of you are saying, to be very precise, one person is saying gold is not liquid. My dear, gold is very liquid. Not as liquid as cash, but gold is very liquid. Can you sell the gold in the market or not? I hope you understand. Can you sell the gold much more easily in the market, convert that into rupee? Of course, answer is yes. Right? So whatever you have held in the SLR, by default, it is counted as a part of HQLA. Done? These are the kind of questions which UPSC will test you. Please be very careful. So these are the three Basel guidelines. Basel 1, Basel 2 and Basel 3. Right? So we are in the process of implementing Basel 3 guidelines. Can I go to the next one? Any difficulty in the Basel? Can I go to the next one now? Let me know. Any difficulty? Sir, I'm confused in all the three Basel norms. Don't be confused, my dear. Argument is simple. First you have Basel 1. I told you, right? First you have Basel 1, then you have Basel 2, then you have Basel 3. And why are we implementing, right, these kind of guidelines? From one time period to another time period, situation is different. Situation in the overall market is different. Risks faced by the bank are different. So in the Basel 1, we said only one risk. In Basel 2, we said three types of risks. Right? And that's the reason we followed a three-pillar approach. And in Basel 3, we found that even this three-pillar approach is not sufficient. Hence we introduced, right, a concept of liquidity coverage ratio. Hence we introduced the concept of capital conservation buffer. We increase the requirement of tier 1 capital, etc., etc. Okay, right? That is a basic idea. When Basel 3 is introduced, 2008 or 2010? 2010. Announcement was done in 2010. But sir, what if the value of the bond gets decreased? Yes, it will happen. It will happen. Can I connect it to current affairs? How many of you have read what happened to the banks in USA? This was one of the issues. How many of you have read what happened to the banks in USA? The banks in USA, many of these banks which have shut down very recently, they have sold the government securities, they have sold the bonds in the market. And when the market price is very low, automatically you'll end up incurring losses. But the point is this, very simple. If the customer wants to withdraw money, bank cannot simply say no. I hope you understand this. I hope you understand my argument. You as a customer, you have a deposit in a bank. You have gone to the bank, you want to withdraw your deposit. Bank cannot simply say, no, I will not give you money. Until and unless they have orders from RBI. I hope you understand this point here. Until and unless they have orders from RBI, they cannot simply say, no, I will not allow you to withdraw money from your own bank account. They cannot do that. And that is a precise reason they will have to sell these assets in the market, get the money, allow you to withdraw money. Done? Okay? Okay, done. Let me go to the next one. Concept of NPA, non-performing asset. Concept of NPA, non-performing asset. Now, what is this non-performing asset? Whenever the loans or advances are given by the bank, you can classify them into two parts. One, whenever the loans are repaid, we'll call them as a standard asset. And many of you might simply start asking me, sir, why are you calling loan as an asset? Please go back to the earlier discussion. Loans are assets for a bank. So loans are given by the bank. The borrower repays the loan. That is called as a standard asset. But let's say hypothetically, by 5th of, right, let's say June, because we are going to start June now. By 5th of June, you are supposed to make a payment to the bank. Your monthly payment is due by 5th of June. You will not repay it. Now, the bank will wait for 90 days after this. the bank will wait for 90 days after this. And even during these 90 days, from 5th of June, if you do not make a payment to the bank will classify this as non-performing asset. Any difficulty? Please do let me know right now. Right, so you have taken a loan from a bank, you are paying the amount promptly. 5th is the last date, by 3rd of every month you are making a payment. If that is a situation, the bank will call this asset as a standard asset. Second, you have taken the loan, 5th of June you are supposed to make a payment, you don't make the payment, I'll call this as a default. Any problem? Let me know. 5th of June, you are supposed to make a payment, you don't make a payment, I'll call this as a default. You have defaulted on your payment. And from this 5th of June, they will wait for 90 days. And after 90 days, the bank will classify this asset as non-performing asset. NPA, non-performing asset. Now, after 90 days, it is classified as an NPA. If it is repaid, a standard asset. But once, right, understand this, once there is a default, 5th of June, once there is a default, till 90 days, this account will be classified as a special mention account. Is it okay? Right, 5th of June, you have not repaid. Immediately, I cannot classify this as NPA. I will have to wait for next 90 days. But till next 90 days, I'll simply call this as a special mention account, SMA. SMA 0, which means the default is for 30 days. From the 5th June till next 30 days, you have defaulted, you have not repaid. Then I'll classify this as SMA 1, 31st day to 60th day, I'll classify this as SMA 1. And 61st day to 90th day, right, 61st day to 90th day, will classify this as SMA 2. And after 90 days is over, after 90 days is over, we'll simply classify this, right, as non-performing asset. And within the non-performing asset also, within NPA also, there are different, right, classifications. That is, let's say, right, have a look at this again. Don't introduce CSAT now. Right, don't introduce CSAT. Let's assume 5th of June you are supposed to make a payment. That is 5th of June 2023. So count 90 days. Again, approximately. Don't introduce calendar. June to July, July to August, August to September. Can I say 6th of, or let's say 5th of September? 5th of September, 90 days are over. Again, don't worry about calendar. But sir, here 30 days are there, here 31 days are there. Don't worry. Imagine 90 days. Right? So June to July, July to August, August to September. 90 days duration is over. Now, once the 5th of September is over, the bank will classify this as a non-performing asset. Now, follow the next classification. From the 5th September 2023 to 5th September 2024, it will be classified as substandard. Any difficulty here? From the 5th September 2023 to 5th September 2024, that is up to 12 months, it will be classified as a substandard. Now, after substandard is over, 2 more years, that is basically after this, right, after 12 months, after 12 months is over, right, after this is classified as doubtful asset. Doubtful asset. And generally, for how many years it will be classified as a doubtful? For next 3 years. I repeat, next 3 years. For next 3 years, this is classified as a doubtful asset. For next 3 years, that is from 5th September 2024 to 5th September 2027, it will be classified as doubtful asset. And after even this 3-year period is over, we'll simply classify this non-performing asset as a loss-making asset. Any difficulty in all of this? Please do let me know. I'll repeat it again. Understand the logic here. 5th June was your deadline. That was the last day to make the payment. You did not make it. If you pay it, bank will count it as a standard asset. If you don't pay it for the next 90 days, they will classify this as a special mention account. SMA, special mention account. That is, after the standard account, right? You can't call it as a standard account because you have not made the payment. And now immediately you cannot call it as NPA also. You'll have to wait for 90 days. So what I'll call it as SMA, special mention account. And after 90 days is over, from the default date, I'll simply call this as a non-performing asset. And once it is classified as a non-performing asset, for 12 months, I'll call this as a substandard NPA. And after 12 months is over, I'll call this as a doubtful NPA. And after 3 years of being classified as doubtful, I'll simply classify this as loss-making NPA. This is the classification used by Reserve Bank of India. Please remember this. Remember this. Okay, this is a classification. Now, in case of the domestic market, that is in case of India, in the recent times, the number of NPAs have increased. Although they're decreasing now, if you look at the last 10 years, NPAs in case of India have increased. Why? What is the reason? Why the NPAs are increasing? Let's start. First and second, please understand this. There is a lower global demand in the international market, and there's a slowdown, recession in the domestic market. That is, I'll give a very simple example. Imagine you're a manufacturer. I'll reintroduce your bottle. Right, your friend is back. I'll reintroduce it. You have taken a huge amount of loan from a bank. From a bank, you have taken a huge amount of loan to manufacture this bottle. Now you have manufactured the bottles. You will have to sell it either in the domestic market or you will have to sell it in the international market. Anybody who says, sir, apart from these two, I have one more source. We will export it to Mars. That is also international market, by the way. So either the bottle you will have to sell it in India or outside India. Now, please tell me if there's a situation such as pandemic. If there's a situation such as pandemic, do you think the demand for the bottle will be very high, both in domestic as well as international? Simple idea, right? If the demand is very high, if there's a pandemic, if there is a higher inflation rate, if there is a recession, etc., will the demand be higher? Of course, no. Some of you are saying yes. How? My dear, you have experienced a pandemic, right? I generally get this doubt based on the answers given by the students. My question was, imagine there's a pandemic. Will there be a demand for these kind of products in the market? Your answer is yes. What kind of experience did you have during pandemic? I'm just intrigued. Did Government of India allow you to go to market, keep on roaming throughout the city, keep on consuming goods and services? If that is yes, right? Again, if you say yes, my dear, you are not living in India or for that matter on earth during that period of time. Okay, so argument is simple. The demand went down. And sir, some of the times you take only example of pandemic, right? Always pandemic is not there. 2008, you tell me. There's a global financial crisis. There was a crisis in the international market. Right now, tell me, even during this crisis, will there be a higher demand for goods and services? No. Or for that matter, there is a recession in Germany now. Tell me, is there a higher demand for goods and services in Germany? Again, the answer is no. Right? I hope you understand the argument here. So whenever there are certain events that are taking place like this, such as a recession, such as global financial crisis, such as pandemic, the demand both in the domestic market as well as the international market automatically will go down. Right? Demand automatically will go down. And now you are a manufacturer, you have taken the loan, you are not able to sell, will you be able to repay the loan? Think of this. Will you be able to repay the loan? Answer is no. You will not be able to repay. Now, is it okay if I say because of this, the NPAs in the banking sector in the last 1 decade have been increasing. Is it okay? NPAs, non-performing assets in the banking sector, have been on a higher level. Right? So first and second. Third one, increasing number of willful defaults. This is very interesting. I'll take a very simple example. Let me know whether you have understood this or not. All of you heard of the case of Vijay Mallya? Mr. Vijay Mallya. Now, please tell me a very simple question. I'll ask a very simple question to all of you. Do you think Mr. Vijay Mallya had sufficient assets to sell and repay the loan or not? Simple question to all of you. Do you think Mr. Vijay Mallya had sufficient number of assets to sell in the market, get the money and repay the loan? Some of you are saying no, but the answer is yes. Answer is yes. There was sufficient assets with the person to sell in the market, to get the money and repay the loan. But did he do that? Simple. Did he do that? No. Right? He simply said, no, I will not repay it. Now, what is the importance of this? I'll define what you mean by willful default. I'm going to define what is the idea of a willful default. Willful default simply means when the borrower has sufficient capacity to repay the loan, but purposely will not repay the loan. Is it okay? I'll repeat the statement again here. Willful default simply means a person who is a borrower, right? A borrower has sufficient amount of assets to repay the loan, but purposely they will not repay the loan. This is called as a willful default. And as per RBI, as per Supreme Court of India's affidavit, etc., the number of willful defaults in case of India are higher. Okay, right? The number of willful defaulters in India are very high. Now, when the number of willful defaulters are very high, what will happen to NPAs? What will happen to NPAs, non-performing assets? The number of NPAs automatically will increase. And here itself, I want you people to read the newspaper tomorrow. Right? Tomorrow, what is going to come? I'm telling you. You will come across one of the statements given by the RBI governor today. Mr. Shaktikanta Das has given a very, very strict warning to the banks. Strict warning to the banks. Right? Just now it was there in the newspaper. I'm sorry, online, this thing I was reading. There is a concept called as evergreening. There is this concept of evergreening of loans. And Mr. Shaktikanta Das, that is the RBI governor, has warned all the banks in India not to go for evergreening. Now, what is this idea of evergreening? Let me explain this. Let me explain the basic idea. Imagine I'm a businessman. You are a bank manager. Both of us are very close friends, relatives, close friends, whatever it is. Now, have a look at this. I've taken the loan and I'm incurring losses and I'm unable to repay the loan to you. And if I'm unable to repay the loan, what you will have to do is classify me as a non-performing asset. But rather than doing this, what you will do is to repay the existing loan. I repeat, to repay the existing loans, you will give me one more loan. Look at this. To repay the existing loan, you will give me one more loan. And what I'll do? Imagine I'm supposed to make a repayment of 100 rupee to you. I'll take a loan from you, use that money to repay existing loan. This is called as evergreening of loans. Any problem in understanding this? This is called as evergreening of loans. And it has been found that many of the banks are involved in evergreening. And that is wrong. You're not supposed to go for evergreening of loans. Right? If a bank is involved in evergreening of the loans, you tell me, will you be able to understand what is the actual health of the bank here? Think of it. If a bank is involved in evergreening, will you be able to ever come to know what is the actual health, whether the bank is stable, unstable, are they going to incur a loss, are they going to shut down in the future? Will you be able to come to know? Absolutely no. Absolutely no. The bank says I've given more loans, right? And the new loans are used to repay existing loans. So on one side, bank says the loans issued by us have increased, which is good. And on the other side, the bank says we are able to recollect the loans, which is also good. But what if the borrower, that is me in this example, I have taken one loan, unable to repay, I'll take another loan and I will simply close down my company after 2 months. Think of it. After 2 months, I'll simply shut down my whole company. Complete losses, I'll simply shut down. Can you imagine the number of, or let's say the value of losses that the bank will incur now? That is the precise reason evergreening is not good. The banks are not supposed to go for evergreening. Done? Right? So increasing number of willful defaulters. That is also one of the concerns which has contributed to higher NPS. Next one, inefficient functioning of debt recovery tribunal. Inefficient functioning of debt recovery tribunal. Now, what do you mean by debt recovery tribunal here? Let me explain the concept to follow this very carefully. Follow the explanation here. Imagine here is an individual borrower. Individual borrower who will take a loan from a bank. And second, imagine here is a company that will take loan from a bank. And this is the bank which is giving loan to both of them. One is a company and the second one is an individual. Individual is you and me. I can use the term individual, or I will also use one more term, retail borrower. Now understand the concept here. If the individual borrower who has taken the loan doesn't repay the loan, then the bank will simply approach authority called as debt recovery tribunal. They will approach an authority called as debt recovery tribunal, in short DRT. And in the second case, the bank has given loan to a company does not repay the loan, then the bank will simply approach one more authority called as National Company Law Tribunal. National Company Law Tribunal. NCLT, in short NCLT. Very often you'll come across this in the newspaper. Can I give you the most recent example? Go India. Go India. This is a most recent example regarding, right, the recommendation, or let's say the term NCLT coming across in the newspapers. Now let's start. So a company has taken the loan, they will not repay, the bank will take the company to NCLT. The individuals have taken the loan, they will not repay, the bank will simply go to debt recovery tribunal. Now what is the problem? Why I have written debt recovery tribunal as one of the causes here? I'll ask a very simple question. Imagine two examples. There are, let's say, 4 judges in example 1, and in example 2, imagine there are 10 judges. In both these examples, please tell me, assuming everything else remains the same, if the number of cases filed, I repeat, if the number of cases filed will increase from 100 to, let's say, 2000 cases. The number of cases filed will increase from 100 to 2000 cases. Where do you think there will be a huge delay? In which of the 2 examples do you think there will be a huge delay in resolving all of these cases? And this is not very technical also. And some of you are making a mistake here also. Right? I don't know how. What is your argument? Right? Some of you are saying, sir, example 2. How, my dear? How? Number of judges in example 2 are 10. According to you, 10 judges are going to work inefficiently compared to 4 judges. How? What is your argument? Right? Again, so understand the logic here. Automatically, the whole argument is simple. In example 1, the number of cases will increase. burden on the judiciary will increase, and as a result of this, there will be a huge delay in resolving these cases. Apply the same logic to debt recovery tribunal. Apply the same logic to debt recovery tribunal. In the debt recovery tribunal, when it was established, Government of India said that we want to remove these cases. Remove means resolve. We want to clear these cases in a span of 6 months. In the span of 6 months, we'll be able to resolve these cases whenever the bank will take it to debt recovery tribunal. Over a period of time, number of cases that have been taken to DRT have increased by a huge number. The number of cases has increased by a huge number. But how many benches are there? Right? How many people are there to take up all these cases? That has not increased by the same pace. As a result of this, is it okay if I say the number of cases which are pending at the debt recovery tribunal have increased? Any problem here? The number of cases which are pending at the debt recovery tribunal have increased. And when the cases which are pending at the DRT will keep on increasing, automatically these cases will remain as NPA for a bank. Right? That is basically the reason I've written inefficient functioning of the debt recovery tribunals also have contributed to rise in the NPAs in India. And finally, the governance issues. The governance issues. What is this idea of governance issues? Right? Have a look at this. Imagine you have taken certain amount of loan, and Government of India has asked you to construct a particular infrastructure project. Somebody will go to Supreme Court of India, file a petition against your project. They'll simply say this project is not conducive for environment. For this project, they are clearing forest. For this project, they are going to destroy certain habitat of wild animals, etc., etc. Now, please tell me, will the Supreme Court allow you to complete the project? And even if they allow it, simple question, will there be a delay in the completion of the project or not? And in many cases, can I give you a very, very prime example recently? Very, very prime example which has happened recently. The bullet train project. Have you heard of this? Bullet train project. The bullet train project was basically passing through one point. And the court said, you are not allowed to pass through this land. What you will have to do is, you will have to go underground. You'll have to take a deviation. Sir, was it there in the newspaper? Please check, it was there in Hindu itself. Now, please tell me if the project is going to change now. If the project is going to change now, will the cost related to project change or not? Point number one. Point number two, will there be more delay in completing the project? Again, the answer is yes. And what if the cost increases by such a huge amount, you will not be able to even earn any revenue or profit from the project. Right? Most of the times the projects will not be completed. They will remain as such. The borrowers who have taken the loan, that is, let's say a developer, they will not complete the project. Will they repay the loan? Think of it. The borrower, imagine you're the borrower, you're the developer of this project, right? Because of some of the ministries under the government or Supreme Court of India, etc., you are not able to complete the project. Will you repay the loan? No, you will not repay. Right? Because for the project for which you have taken the loan, that project itself is not over. Can it be classified as NPA now? Of course, yes. That is also one of the reasons why NPAs are higher in India. Right? So these are some of the reasons why NPAs in the domestic market, I'm talking about India, focus on India. Right? So these are some of the reasons why NPAs have been increasing. Now, if NPAs are higher in the banking sector, imagine the NPAs will start increasing. What is the problem? Point number one, if NPAs increases, will the profits earned by the bank come down? Yes, right? The profits earned by the bank will come down. Point number one. Point number two, if the bank is continuously incurring, right? If the losses are very high, if the NPAs are very high, don't you think that will also affect lending activity of the bank? Think of it. Right? If the bank is incurring continuously losses because of high NPAs, right, will the lending activity, how many loans issued by the bank, will it be affected? Answer is yes. Third one, if lending is affected, will it have an impact on the growth of the economy? That's the third point. If the lending activity of the banks are affected, will it have an impact on the growth? Answer is again yes. If anybody has a doubt, please do let me know right now. Fourth one, in the market, in the stock market, in the bond market, imagine a bank is there, NPAs are very high, losses are very high, they will come, they will offer bond to you. Will you purchase them? Let me know. Will you purchase those bonds? They will offer shares to you. Will you purchase the shares? No. Investor sentiment, investors' confidence on the performance of the bank will be lower. Right? So, lower liquidity and profitability of the bank, lower quantity of the loans are given, and generally they will start giving at a higher rate of interest. Investors' confidence would be affected. Higher cost of the loans, that is, if the rate of interest is increased by the bank, automatically the people who are taking the loans, they will also get affected. They will reduce the demand for such loans. Various investment decisions will not be implemented now. It will also have an impact on the growth. Right? So these are some of the outcomes of having higher NPAs in the economy. Okay, these are certain impacts, certain issues. Why? Right, basically higher NPAs are there. Okay, any difficulty? Offloaded means given. Offloaded means given to others. Repeat, bond purchase point. If a bank has huge number of NPAs, losses of the banks are higher, the bank wants to sell bonds in the market. Please tell me, will the investors purchase it? Even if the investors purchase, will they not demand higher coupon rate? I hope you understand. Will they not demand higher coupon rate? Of course, yes. Right, because it is risky to invest in such a bank. Okay, third point. Same thing that I've explained just now. Okay, shall I go to the next one? Next. So what is the solution? What is the solution then? You know what is NPA? You know NPAs are higher. Again, please understand, in the last 1.5 years, NPA numbers have started coming down. Right, so you know what is NPA, why NPAs have increased in India. If there are high NPAs, what is the problem? Now, what is the solution to that? Let's address what is the solution then. I'll discuss the most important solution: Insolvency and Bankruptcy Code, IBC. Insolvency and Bankruptcy Code, very, very famous. Government of India introduced the Insolvency and Bankruptcy Code in 2016. Right, somewhere in the month of September, they introduced the concept of Insolvency and Bankruptcy Code. Now, what will happen under the Insolvency and Bankruptcy Code? Point number one, let's discuss the features. Point number one, we have set up a regulator for IBC. We have set up a regulator in the IBC. Right, there is a regulator who will ensure that all the people, companies, right, experts, NCLT, everybody will follow the law. There is one regulator. Name of the regulator is Insolvency and Bankruptcy Board of India. Insolvency and Bankruptcy Board of India. In short, they will also write in the newspaper IBBI, Insolvency and Bankruptcy Board of India. Just like RBI, is RBI a regulator or not? Just like RBI regulates banking sector, within this insolvency situation, who is the regulator? We have IBBI. Point number one. Point number two, IR simply stands for Insolvency Resolution. IR simply stands for Insolvency Resolution. Right? This is IR. But what is the meaning of the term IR? Follow this explanation very carefully. Here is, right, let's say, here is a bank. The bank has given loan to a company. Now, the company has not repaid the loan. Company has taken the loan, not repaid the loan. Now the bank has to decide, because the bank is the only creditor, the one who has given the loan. Bank is the only creditor. The bank has to decide, should the company be sold to a buyer in the market? Should we sell the company to a buyer in the market, or should we simply close the company? Should we simply close? Close means what? We will shut down the manufacturing facility. We'll remove all the workers. Whatever assets are there, we'll simply sell it off in the market. It is also called as liquidation. This is also referred to as liquidation. So one option is, either you can sell, right, the complete company, you can sell it to a buyer. This is called as insolvency resolution, or you can go for liquidation. Now let me see how you people think. I'll answer this. Tell me, according to you, which is preferable, number 1 or number 2? According to you, which is more preferable, 1 or 2? Your answer should be 1. 1 is more preferable. I'll tell you why. Right? Imagine you're a manufacturer. A simple example. You're a manufacturer of this bottle. I am supplying steel to you. Now, if I am under this, right, insolvency and bankruptcy code, it is better that my company is sold to another company, so that there is no disturbance in the supply chain. All of you agree? So that there is no disturbance in the whole supply chain. But rather than this, if they decide to close my company, unemployment will be created. Yes or no? Unemployment will be created. What will happen to you? Your raw materials. Your raw material, now you will have to find another seller in the market, etc., etc. So which is preferable for economy? Which is preferable, right, in case of Indian economy? First one is more preferable compared to second one. First one is more preferable compared to second one. Now, can I also say, based on what I've discussed, first one will lead to preservation of the capital. First one will lead to preservation of capital. And second one will lead to destruction of the capital. Any problem in understanding both of the terms? First one will lead to preservation of the capital. Second one will lead to destruction of the capital. Because now the companies will be closed, employees will be removed, right? The supply chain will be disturbed, right, etc. That is destruction of the capital. It is always preferred to have a first one, insolvency resolution, that is conservation or preservation of the capital. Now that is basically called as insolvency resolution. Insolvency resolution, the whole process will be conducted by a professional. I'll repeat the statement. The process, I'll show you the process, have patience. The process of insolvency resolution shall be conducted by a professional in the economy now. And the professional is called as insolvency professional. I stands for insolvency professional. Right, that is a second point. Third point, whenever you talk about the process here, the process of insolvency resolution shall be conducted in a stipulated time period. Within specified time period, the process should be over. Now please understand this. Until very recently, it was 270 days. The insolvency resolution process shall be conducted in 270 days. Government of India has increased this to 330 days, not 60, 330 days. Fourth one, separate process will be there for individual borrowers if they default, and also companies if they default. That is, when individuals will default, the cases will be taken up by DRTs, debt recovery tribunals. And when the companies will be defaulting on the loan repayment, the cases will be taken up by National Company Law Tribunal. Then these are certain very important features. Now let me start. What is the process? I've written the bill here. Bill has been passed. It has become a code now. IBC, Insolvency and Bankruptcy Code. It's a law now. I've written a bill, don't worry. As per the code, what is going to be the process? Step number 1. Either the lender or the borrower will approach NCLT. Okay, either the lender or the borrower. Right, I've used the term lender or borrower. They will also use the term creditor or debtor. Either the creditor or the debtor will approach NCLT. Right, either one of them can approach NCLT, file an application. And once an application is filed, within 14 days, the NCLT either has to accept or reject the application within 14 days. And once the application is accepted, NCLT will appoint a professional, insolvency professional. Sir, why? Why should we appoint a professional here? Let me ask you a very simple question. You are a bank. I'm owner of a bottle manufacturing company. I've taken the loan from you. I've defaulted. My company has incurred a loss. I'm unable to repay the loan to you. Simple question. Should you allow me to manage the company? Think of it and let me know. Right, I've taken the loan, I'm the owner, and under my leadership, the company has incurred a loss. Should you allow me to continue to manage the company? Answer is no. We should not allow. Why? Some of you are saying yes, we should not allow it. The reason is very simple. Already my decisions have led to losses incurred by the company. And if you allow me to continue to manage the company, what is a guarantee that the whole company will collapse after that? That is the reason we will appoint insolvency professional. And once the insolvency professional is appointed, I will not be allowed to manage the affairs of the company. I'll repeat it. I will not be allowed to manage affairs of the company. I cannot be making decisions for the company. Insolvency professional will take over the management. Now, after this, what will happen? The insolvency professional will form the committee of creditors. That is group of creditors. Creditors means what? Lenders. All the lenders, a group will be formed, and that is basically called as committee of creditors. And the committee of creditors will now discuss, should we go for sell-off? Should we simply go for sell-off, or should we go for liquidation? Simple. Should we go for sell-off of the company, or should we go for liquidation of the company? Now, simple question to all of you. If you're reading the newspapers, in case of Go Air, are we not trying to do the first one? Think of it. In case of Go Air, are we not trying to do the first one? We are trying to find if there is any buyer who will purchase the whole company. Some of you say no, which simply shows that you are not reading newspapers, my dear. Right? This is my biggest concern with all of you. Have you seen yesterday's paper? Right? Let me ask you a very simple question. Many of you started asking, sir, what do you think of the question paper yesterday? Difficult. This is my assessment. Difficult. Yesterday's question paper, especially Indian economy part, was difficult. And tell me, those who have seen yesterday's question paper, did you come across some questions for which no book will have the answers? Tell me, if you have seen, definitely this will be one of the inference that you will simply take away. There will be certain questions for which no books will carry answers. And that is the reason I keep on telling you people, don't be so much dependent on the book. Right? Don't be so much dependent upon the book. If you're dependent too much upon on the book, this is exactly what is going to happen. Right? And second, let me know whether this is an inference or not. Out of 14 questions which were asked from Indian economy, were there most of the questions from current affairs or not? Second inference. Those who have seen, let me know. Only economy, I'm talking about economy by the way. Right? Were there most of the questions from current affairs or not? Third question, if you make a divisions, right, let's say chapter wise, around 4 questions, were they from the banking sector or not? Let me know. 4 questions, were they from the banking sector or not? Answer is yes. And that's the reason, again, this is my request to all of you. Either take it as a request or take it as advice, right? I cannot say order, because then you'll simply say, who are you to order me, right? I'll give a complaint against you. So take it as an advice, take it as a request. Read current affairs. And I'll simply tell you one more point as well. Do not be very ambitious. Do not have overly ambitious targets in Indian economy. You will not be able to solve all the questions in the exams from Indian economy in GS paper. That is prelims. I can give a guarantee to you people, you will not be able to solve all the questions. Do not be over ambitious. Right? Why? I'll give a very simple example. Right? There was a question on the term called as beta. There's a term on the concept called as beta. Now, none of the books will carry the term beta. Second, you could have read 100 current affairs magazines. Nobody would discuss the term beta. Suddenly, UPSC has the question on beta. You cannot simply get up in the hall and start shouting it is out of syllabus. That is how UPSC will do. Right? In fact, before the examination, that is last week also I told you. Last week also I've told you. Out of, let's say, 15 questions which UPSC will ask, there will be some questions for which, right, you will not get the answers. You will not have read about that anywhere. That is what UPSC will do. And as far as I'm concerned, out of 14 questions were there from banking, very static questions. You could have easily solved even by reading a book, right? And some of them were purely from current affairs. And out of 14, if anybody is able to solve, let's say, somewhere around 9 to 10, that's a very, very, very good score for Indian economy. Out of 14, if you're able to solve correctly around 9 to 10 or even around 8 to 10, very, very good score. Right? That is what I would simply suggest to all of you. Okay, with this caveat, let me come back. Again, whole idea is very simple. Very simple. Read newspapers. Read as much as possible current affairs. Now let's start. Insolvency professional will form a group of creditors, that is lenders, committee of creditors. Now the committee of creditors will have to take a call. Should we liquidate the company, or second, should we sell off the company? We will mostly try for the first one, because we know there are advantages with the first one. We'll try to use the first one. If not possible, automatically we'll go for liquidation. Done. Now the committee of creditors will have a discussion, then voting will take place, and they will decide should we go for one or two. And please understand, all of this has to be done within a time-bound manner. Within the time-bound manner. What is a time-bound manner? Within 330 days, all of this process is supposed to be done. Now, right, one very important point that I want to mention here is, sir, what if committee of creditors are not able to decide? Right? What if they're not able to decide? In such cases, please have a look at this. Insolvency professional will recommend liquidation of the company. By default, right, insolvency professional will recommend, right, the liquidation of the company. And liquidation process is started. And if the committee of creditors will decide, will go for a sell-off. If they find a buyer, they will go for a sell-off. Then, right, basically we'll start with the sell-off of the company. This is how, right, the insolvency and bankruptcy code process is actually implemented. Done. This is the basic process here. Can I go to the next one here? Can I go to the evaluation part of it? Sir, what if they reject it to take? What do you mean by rejection? Right, you're basically saying if there is no buyer, if they reject, then the only option is liquidation. Okay, right, basically it is liquidation. If there are no buyers, automatically we'll go for liquidation. Even in case of Go Air, if there is no buyer, automatically we'll go for liquidation. Because if there is no buyer, what should be the solution then? Right, simple idea. Okay, right, so committee of creditors, what is COC? COC I've written in the top only. Can you see that? Committee of creditors. Some of you are asking what is long form of NCLT? My dear, I don't know, right? What is your span of remembrance? right? What is your capacity of recollection? Hardly half an hour is over. Already you're asking what is the long form of, right, NCLT. Very, very bad memory, by the way. Okay, so focus on the discussion. So COC simply means Committee of Creditors. All the creditors means lenders. All the lenders are grouped into one committee that is called as Committee of Creditors. Okay, done. Right, so this is basically the concept of Insolvency and Bankruptcy Code. Now, what is a critical evaluation? This is more important for your exams. Critical evaluation. Critical evaluation. By the way, before going forward, yesterday, if you have seen the paper, was there a question on PLI? Let me check. Right, was there a question on PLI? Production linked incentive? A straightforward statement, by the way. Today in multiple newspapers, right, not in Hindu, that's a difficult part to read and rely only on Hindu. Right, in, I believe in Financial Express, there was one article regarding PLI, production linked incentive. Very nice article. If time permits, I know all of you are very busy with UPSC preparation. If time permits, please read that article. Please read that article. Very, very nice article. Okay, anyways, when I discuss PLI, I'll discuss that also. Don't worry. Let's start. Right, positive outcomes and the concerns related to the IBC. Point number one, this will provide a unified framework. Unified framework means what? A single framework. Single, right, point of all the law. So what is the advantage? Why are you writing it as a unified framework? Before we implemented IBC, before we brought in IBC, please understand, there were different laws having provisions to conduct insolvency resolution. I'll repeat the statement. Before we introduced IBC, Insolvency and Bankruptcy Code, there were different laws having provisions for insolvency resolution. For example, we had provisions of insolvency resolution under Companies Act. We have provisions of insolvency resolution, right, under what is that? The concept of SARFAESI. Again, you'll start running behind SARFAESI now. Right, we have different provisions under the concept of BIFR, Board for Industrial and Financial Reconstruction. Right, we had different provisions of insolvency under the NCLT Act. A simple question to all of you. What is more preferable? Having different laws, having different provisions, or only one law having all the provisions? What do you think makes more sense to you? Which is going to promote ease of doing business to you? Unified framework. Now please look at point number 1 and point number 5. Is it okay? Point number 1 and point number 5. Right? Did we solve both of them? Next, time bound resolution. Under the Insolvency and Bankruptcy Code, now the process has to be completed in 330 days. Right, now the process has to be completed in 330 days. And I'll tell you what is the reality. Have patience. As per the law, we are supposed to complete in 330 days. Earlier, before IBC was implemented, on an average, the process used to take 4.3 years. I'll repeat the point here. As per the law, we are supposed to complete the process in 330 days. Before IBC was introduced, on an average, it used to take 4.3 years. At least as per the law, did we reduce the time frame required? Did we reduce the number of days required to complete the process? Yes, time-bound resolution. Third one, lesser time compared to earlier situation. Now, some of you will say, sir, 2 and 3 are both one and the same. No, implications are slightly different. Right, one is from earlier situation of 4.3, we are able to reduce it to 330 days. And as a result of this, NPAs in the banking sector are expected to be reducing at a very faster pace. Okay. Next, provides the power for the creditors, whether secured or unsecured. Understand this carefully. Provides the power to the creditors, whether secured or unsecured. Now, first and foremost, can you understand the idea of a secured and unsecured creditors here? Let me know. We have discussed the concept of secured as well as unsecured. Now, I'll directly give you an example. Tell me which is secured, which is unsecured creditor. Example 1. You are a company. You're manufacturing a bottle. Your friend is back. Okay. You're manufacturing a bottle. I will supply raw material to you and you will make a payment after 2 months. Right. Here is a supplier. The supplier will give you raw material, sell the raw material to you, and you will make a payment after 2 months. Second, here is a bank which has given the loan to you. Now, the bank will give a loan to you, collect a security or collateral. Can I simply say example 2 is secured creditor, example 1 is unsecured creditor. Any difficulty? Example 2 is a secured creditor. Example 1 is an unsecured creditor. By the way, please understand, some of you will ask me, sir, why supplier is a creditor here? I'm giving you raw material today, which is worth, let's say, 2 lakh rupees. And you will give me 2 lakh rupees after 2 months. Is it not as good as saying you're taking 2 lakh rupees and you will return it after 2 months? That is creditor only. Right, so basically supplier is unsecured and banks are secured. Now under IBC, either secured creditor or even unsecured creditor can go to NCLT, file a complaint against the company. Simple idea. Both the secured as well as unsecured creditors can go to NCLT, file an application, file a complaint against you. And why this is important? Why this is important? Understand the differences here. Before IBC was implemented, I will supply raw material to you and you will tell me basically, right, you will pay the amount after 2 months. I will come to you after 2 months. You will say, right, you will pay it again after 1 more month. That is after 90 days. I will come to you after 90 days. You will say, right, 1 more month. So 120 days are over. I'll come to you. Now, after 120 days, you will simply ask me, I will not pay the amount. Do whatever you want to do. Now, what I used to do before IBC, what I used to do was, I will go file a civil case against you. And all of you know how quickly the judicial cases will be taken up, how quickly all the cases will be resolved. Now, under the current situation, under the IBC, what will happen is, you have promised me to make a payment after 60 days. You will not make the payment. I will go to NCLT, file a complaint against you. Tell me, just because you have not made a payment after 60 days, is there a possibility that you will end up losing ownership of the company or not? Let me know. Just because you made a delay, right? You are ready to make a payment. You are waiting for 5 days. You are waiting for 20 days, etc., etc. I will not wait. I will simply go to NCLT, file a complaint against you, application against you. Is there a possibility that you will end up losing ownership of your company? Answer is yes. Some of you are saying no. Again, right? I don't know what you're listening to. If the company is sold off to somebody else, will you lose the ownership? Yes, you will lose the ownership. Now, what will happen because of that? Will there be a change in your behavior or not? Will you be more concerned about my payment or not? Will you be very proactive whether I'm going to get the payment or not? Yes. And this is the biggest advantage of IBC. I hope you understand. This is the biggest outcome of IBC. That is, the borrowers, debtors, behavior has changed. Right? The borrowers or debtors' behavior has changed now. Because they know that if they don't make the payment on timely basis, there is a chance that they will lose the ownership of the company. Right? That is basically the fourth point. These are certain positive outcomes of IBC. What about certain concerns? Issues related to IBC. Point number 1, time taken for accepting and admitting applications is higher. Why? I'll tell you. All of this is from current affairs. Imagine I'm right, same. I'm a supplier of raw material to you. And right, you have not repaid the amount. After 2 months, I will go to NCLT, file an application. And have a look at this. Have a look at this. the NCLT within 14 days is either supposed to accept or reject the application. They're supposed to accept or reject the application. But what is happening more and more times is the NCLT, the number of people, that is judges, who are taking up the hearings, who are taking up the cases, the infrastructure that we have is comparatively lesser compared to number of cases being filed. Think of it. The infrastructure that we have is not able to handle all the cases, right, proactively. They are not able to take up all the cases within 14 days. And in many of the cases, what is happening is they are able to take up the case, but they are asking for extra documents. They are asking for extra, right, proof, etc., etc., etc. As a result of all of this, will they be able to accept or reject within 14 days? Think of it. Will they be able to accept or reject in 14 days? No, it has increased. In many cases, this is a fact, by the way. In many cases, they have taken more than 100 days to accept the application. Now, you tell me, if the first step itself, this is the first step, by the way, if the first step itself there is a delay, don't you think the whole process will get delayed? The whole process automatically will get delayed. That is one of the biggest problems. Second, actual time taken for resolution is also very high. Actual time taken for the resolution is also very high. Why? I'll tell you. Imagine the NCLT will accept the case, but one of the creditors will go to a high court, file a complaint against the company. Has it happened? Yes, many cases it has happened. And I'll tell you what is the impact of it. Imagine, right, there is a company's creditors are there. Creditors are supposed to decide whether to sell it off or liquidate. One of the creditor will go to the high court, file a complaint against the company. Now, simple question to you, think of it. If there is an existing case in a high court against the company, will there be more buyers for this company? Think of it. Will people in the market come forward to purchase this company? No, case is pending. So now case will start. That will delay the whole process. That will basically delay the whole process. That is the second concern. Third one, most of the cases are going through liquidation. And don't you think, rather than going for insolvency resolution, if they go for liquidation, right, we are not able to achieve the objective of insolvency and bankruptcy code. Done. Last one, the recovery rates as of now are very low. Recovery rate means what? Let me give a very simple example. Here is a bank. To the bank, the borrower, or let's say a company, is supposed to make a payment of 100 crore rupees. I'm taking simple numbers so that calculation becomes easier. Imagine here's a bank. The borrower is supposed to make a payment of 100 crore rupees. And after insolvency resolution is done, after pending payments are done, after charges are deducted, etc., 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 the bank will be able to recover only 20 crore rupees out of it. Now, can I say recovery rate for the bank in this case is 20%? Let me know. Recovery rate for the bank in this example is 20%. Any difficulty in the calculation here? That's the reason I'm taking good numbers, 100 crore, 20 crore, so that calculation becomes easy. So in case of the insolvency and bankruptcy code, the recovery rates are lower. We need to increase the recovery rates so that the adoption, acceptance of the model automatically will increase. Done? So this is the critical evaluation of insolvency and bankruptcy code. Now there is a current affairs point regarding this. That is, right, pre-pack insolvency resolution. We'll have a discussion regarding that when I take up MSME sector. Micro, small, medium enterprises. We'll discuss one more current affairs reform related to this. Pre-pack, but later, not today. Done? Right, so this is the discussion regarding IBC. Okay, any difficulty? Can we go ahead? Third point is not cleared. Most of the cases are going through liquidation. What is there in that? most of the cases, the companies are getting liquidated. If the companies are going through liquidation, it also means companies which are going under the insolvency resolution are also very low, right? That is basically a concern. We wanted to have more of a preservation of capital. Now it is more of a destruction of the capital. Okay. Lesser time compared to earlier situation. Earlier, for insolvency resolution, we used to take 4.3 years on an average, right? And under this, it is 330 days. Automatically, the time taken or time required for liquidation has come down. I'm sorry, time taken for insolvency resolution has come down. Okay, anything else? Okay, any other question that you people have? Please do let me know so that we can take a break after this. Sir, can bank charge different interest rates for different sectors due to risk weight? Of course, yes, banks do that. Banks do that. I've told you all of this. A bank, when they will give to real estate, a loan to real estate, a loan to a farmer, a loan to, let's say, a housing buyer, a loan to a vehicle purchase, rate of interest will not be same. Rate of interest has to be different. Sir, is it different in both public and private bank? I believe you're asking me about, let's say, the idea of a capital adequacy ratio. In case of scheduled commercial banks, it is 9%. Public sector banks, it is 12%. In payment banks, it is 15%. How the bank will know how much percent of risk is associated with different sectors? There's a very, very small document of hundreds of pages published by Basel Committee on Banking Supervision. In that case, they've given what kind of sector, what kind of asset should be allocated, how much weightage. You don't enter into that. You'll become a banker, expert in banking, not required for UPSC. What is LCR? I'll repeat it. LCR, liquidity coverage ratio, simply means the amount of high quality liquid assets the bank is supposed to hold, right, based on how much will be the total outflow of the money in the next 30 days. If the bank estimates that in the next 30 days, let's say 50 crore rupees or let's say 60 crore rupees is going to go out of the bank, then the bank has to maintain high quality liquid assets of 60 crore rupees. Yes Bank case, not required, right? What happened in Yes Bank, what happened in Silicon Valley Bank, all of that is not required. Don't, again, because the concepts that you have discussed, if you understand the concepts, more than sufficient. Don't we give any bond for loans, then how this kind of losses will happen? In what context are you asking? Please let me know in what context. If loan payment was not done, what is the action taken by the bank? Just now we have discussed it. In case of companies, they will take you to IBC, that is NCLT. In case of individuals, they will take you to DRT. Please give actual data of NP of last 3 to 4 years, means continued decreasing NP in last 2, 3, 5. Why? Why do you want to know what is actual data? Because by the next year, don't you think data will change? And don't you think by next year the data will change? Of course, yes. So why do you want to buy at actual data? I could have given it. I know where the data is available. Economic survey. I've read it. I know what is the data, but that is not required. Because next year, when you are appearing for exam, take it from the next year's economic survey. I have a request to faculty and SMEs. Please arrange PYQs options according to the new pattern. Are why? You practice, no? How can I change what was asked in previous year question? I cannot change what has already been asked. You can choose, right? You can practice according to that. When will the collateral attached to a loan be used by the banks? Is it after classifying a loan into loss making? No. Generally, that's the reason I gave you one classification, SMA. Right? In case of SMA, special mention account, whenever an account is classified under SMA 3 or even SMA 2, the banks can simply approach NCLT. Right? In that case, they can start using collaterals. What if NCLT will reject the application within 14 days? Done. You cannot go for IBC then. right? The agreement will continue as it is. What further if NCLT will reject it? You tell me how NCLT will reject it. If company of creators are accepting it, there should be a certain reason why NCLT is rejecting it. Is there any example that you can think of? Has it happened? Let me know. Will NCLT not take any action without complaint? Of course, yes. Somebody has to write an application to NCLT. They will have to approach NCLT. Only then, right, NCLT will take up the case. How can we solve liquidation? Right? There is no solving liquidation. Imagine a company is there. Let's say the company has a land of 2 hectares. Company has 4 machines. Company has 500 employees. Now under liquidation, the land will be sold to somebody else. Employees will be removed. Machines will be sold. That is basically the concept of liquidation. Okay, done. Right. Some of you are saying that, sir, I don't have any financial newspaper in my locality. Or which financial newspaper should I read? If you are an economist, right, in truest sense, when I say economics in truest sense, you don't want to pay money, but you want to read economics newspaper. Have you heard of a newspaper by the name Financial Express? Let me know. There is a newspaper by the name of Financial Express. It is available free of a cost online. Now, please don't say that you don't have even internet. Without internet, you cannot join the class. I know for a fact, right? So basically, Financial Express will give that PDF free of a cost. Register, and you can use that. Okay, done. But my recommendation is read at least one financial newspaper. Read at least one financial newspaper. For example, if you have read today's newspapers, right, beyond Hindu, right, some articles that I've shown you were there in the discussion. One more article on the PLI effectiveness was there in Financial Express. And those who have read Indian Express and Financial Express, there was one article regarding the concept, central page article by Mr. Ashok Gulati. I don't know how many of you have read it. Mr. Ashok Gulati, right? That is basically Mr. Ashok Gulati. He's a very important expert, by the way. Mr. Ashok Gulati writes about agriculture sector. And my recommendation is please read that article, right? That is investment in research and development, especially in agriculture sector, is very low, very low. And the whole article spoke about the idea of investment in research and development in agriculture sector. Read that. In Indian Express, there is an article on 75 rupee coin that has been announced by the government. 75 rupee coin, right? Certain points were there based on that also, right? So that's a reason I keep on asking students to go beyond it. Please go beyond Hindu newspaper. And Financial Express, there was one more article on UPI Lite, right? Payment to banks, right? Etc. etc. So again, my recommendation is simple. Don't just be overly dependent on only one newspaper. It will hurt you in the UPSC examination. Okay. Now, any other questions? Can we take a break now? Any other questions? After appointing insolvency professional, owner loses ownership? No, my dear. We are not transferring ownership after the appointment of IP. What we are basically doing is, once the IP is appointed, IP will start taking the decisions of the company. You're still the owner. Once the sell off is done, you will lose the ownership. Now we are simply asking somebody else to take the decisions for the company, manage the company instead of you. That is the whole idea of appointment of IP. Okay. What is your opinion of yesterday's paper? We have a discussion of the yesterday's paper. Please have a look at it. Okay. Done? Can we take a break now? Okay. Let's take a break. We'll restart at 7:22. We'll restart the discussion at 7:22. Okay, take a break. We'll restart at 7:22 p.m. Okay, welcome back. Can we start? Can we start? Am I audible? Okay, let's start. So we are discussing insolvency and bankruptcy code, right? One of the very important solutions, or let's say the measures that has been implemented by the government of India in order to address the issues of NPA. But in addition to this, there is one more measure, one more important reform that has been implemented by government of India, that is NARCL, National Asset Reconstruction Company Limited. Now, before I start discussing the idea of a NARCL, certain important points. Point number one, you'll come across a concept called as a bad bank. You'll come across concept of a bad bank. Now, what is this idea of a bad bank? Let me explain this. Imagine there are three banks, 1, 2, and 3. In all the three banks, let's say there are certain NPAs, non-performing right assets. Now, rather than bank 1, bank 2, bank 3 trying to resolve non-performing assets, because the argument is that the banks are not experts in resolving NPAs, banks are experts in collecting money and giving loans. So what we will do is, we will set up a new bank. And this is, by the way, referred as a bad bank. What this bad bank will do is, it will simply take over the non-performing assets of all the three banks. Any problem with this model? Please do let me know. The bad bank will simply take away the non-performing assets, NPAs, of all these banks. And the whole idea is simple here. The bad bank will be expert in resolving NPAs. It is an expert in resolving NPAs. These banks are not experts in resolving the NPAs. So by transferring the NPAs into the balance sheet of this bank, the NPAs in the balance sheet of the banks will come down, and we are giving these NPAs to an expert who knows how to resolve, how to take care of these NPAs. That is basically the concept of a bad bank. This is one. Second one, I want to introduce one more concept to you: asset reconstruction companies. Asset reconstruction companies, ARCs, asset reconstruction companies. Now, what is this model of asset reconstruction companies? Follow this very carefully. Imagine here is a bank. The bank will give loan to a company, let's say company X. The company X is unable to repay the loan. Now, what the bank will do is, it will simply transfer this NPA into a company called as ARC. Okay, what this company will do is, what this bank will do is, it will sell this loan, that is basically the company, that's a collateral, to ARC. Now, ARC will try to sell it off in the market, either restructure the company so that it will start performing very well, or it will try to sell it in the market, to some other seller and get the money and pay certain amount of this to the bank. Pay a certain part of this to the bank, and in the process of it will make huge amount of money, because the ARC is providing services. It will charge money to the bank and generate revenues. This is basically the model of asset reconstruction companies. The problem with the asset reconstruction companies in India is that there are more than 20 ARCs in India. I'll repeat, there are more than 20 ARCs in India. But the methodology that I explained just now, the process of using ARCs has not gathered pace. The banks are not approaching many of these ARCs. And the recovery rates under the ARCs is also very, very less. Can I go to the next point now? Can I go to the next point? One is a bad bank. Second one is a concept of asset reconstruction companies. Can I go to the next point now? Any problem? This is the point when you start asking the question, if you have regarding this. When I start discussing, you will keep on asking questions. ARC, again, I'll repeat it again. A bank has given loan to the company X. This loan, I'll call this as account. Now the company is unable to repay the loan. The bank will simply sell off this loan to ARC, Asset Reconstruction Company. It's a financial institution. Now this ARC will try to basically sell off the company or reconstitute the company, get the money and pay the amount back to the bank and charge a certain amount, collect a certain amount. That is basically the concept of ARC. In case of India, there are more than 20 ARCs. Performance of the ARCs is very, very poor. Recovery rates are very, very poor. Right? And that is the precise reason we have a concept. We have a concept of insolvency and bankruptcy code introduced by the government. Okay, bad bank. 3 banks are there. All of them have NPAs. Rather than keeping these NPAs with the banks, because banks are not experts in all of it, will transfer these NPAs into one institution which is called as a bad bank. This bad bank is an expert in resolving all of these NPAs. Done? That is basically the two concepts I wanted to discuss. Now let's start NARCL. NARCL is basically the concept of a bad bank. Right? It is basically the model of a bad bank that has been proposed by Government of India. Now have a look at this. NARCL, National Asset Reconstruction Company Limited. Out of this, 51% of this NARCL will be owned by Government of India. 51% of it will be, not by Government of India, by public sector banks. PSBs is Public Sector Bank. Public Sector Bank. Then PSB. Now, I'll add one more point here. When you say NARCL, there are two entities here. Understand the process. There are two entities. What are the two entities? The bank will simply transfer the NPA to NARCL. NARCL will not sell the asset in the market. It will be IDRC, long form of IDRC as well as NARCL is here. Please don't keep on asking in the next slide what is the long form. IDRC stands for Indian Debt Resolution Company. NARCL is basically National Asset Reconstruction Company Limited. Now, bank will transfer the NPA to NARCL. NARCL has one more authority with it. I repeat, there is one more operational entity with NARCL. They will give it to IDRC so that they can find a buyer in the market, sell the asset, collect the money, transfer it to the bank. Sell the asset, right? Get the money and transfer it to the bank. This is basically the model which has been proposed and we are implementing. This has started very recently. We have started implementing the concept of National Asset Reconstruction Company Limited. Any difficulty in understanding the model? Let me know. Any difficulty in understanding this model? Now, what are the important points here? 51% of NARCL will be owned by PSPs, whereas 51% of IDRC is owned by private sector banks. Cabinet has cleared a guarantee program of 30,600 crore rupees. 30,600 crore rupees. I'll discuss that, have patience. The bad bank, that is NARCL, will be taking over and resolving NPAs up to 2 lakh crore rupees, and government will be providing guarantees for 5 years on the security receipt. Now, what is the meaning of point number 3 and point number 5? Rest of the points are clear with you. First one, right, 51% of NARCL is owned by PSPs. Second one, there is one more entity under NARCL associated with NARCL, that is called as IDRC. 51% of IDRC is owned by private sector banks. Third point I'll explain now. Fourth point, this NARCL is expected to clear NPS to the extent of 2 lakh crore rupees. And fifth one I'll discuss now. Now, what is the basic idea of a third and fifth? Let me explain this. Imagine you're a bank. Follow this very carefully. This is very, very technical. Just have a simple understanding. Very, very technical, because there is a technical concept called as securitization. You don't require it for UPSC. Understand. Imagine you're a bank. You have an asset of 100 crore rupees. Non-performing asset of 100 crore rupees. Now, question number one. Answer to this. Will you be able to recover 100 crore rupees completely? Think of it. Will you be able to recover 100 crore rupees? It will not happen. Trust me, it will not happen. Point number two, I will approach you and say, I'm NARCL. I'll approach you and say, sell me that asset. I will give you recovery. Sell me that asset. Now, you please tell me, when you sell that asset to me, will you demand 100 crore rupees from me? Of course, no. And nobody will give you 100 crore rupees. I will simply say, let's say based on negotiation, what is the demand for such companies in the market, what is the value of the company, etc., etc. I will say, I will sell this company and I will return to you, let's say 30 crore rupees. Simple numbers. I'm telling you, give me this asset. I will have a recovery of 30 crore. I'll give it to you. Now what I'll do, I'll simply take this asset, hand it over to my operational entity, IDRC, to find a buyer in the market. And let's say there's a buyer in the market and IDRC will sell off this asset to the buyer. But the buyer, the maximum value in the market that we are able to generate is 25 crore rupees. Is 25 crore rupees. Now have a look at this. I have promised you 30 crore. Now, how much money I have been able to collect by selling the asset? How much money I have been able to collect by selling the asset? 25 crore. How will I be able to give you 30 crore rupees? That is where Government of India, I repeat, Government of India says, if promised value, have a look at this, if the agreed value is 30 crore, is greater than the realized amount. If the agreed value is greater than realized amount, can you see the realized amount here? Then whatever is the shortfall, Government of India has set up a fund for it. That shortfall will be provided by the government. Any problem in this? If the agreed value, right, between the bank and NARCL is greater than the realized value, then whatever is the shortfall, whatever is the gap, how much is the shortfall? Please tell me. How much is the shortfall here? Shortfall is 5 crore rupees. Any difficulty? Shortfall is, that is the gap is 5 crore rupees. Then basically that 5 crore rupees will be provided by government because we have set up a fund that is a contingent liabilities fund. 30,600 crore rupees has been set aside by the government precisely for this. Any difficulty in the third point? Let me know. Any difficulty in the point number 3? Let me go to point number 5. There is one more concept here. The idea of security receipts. What is this idea of a security receipt? Same example. You are the bank. I am the NARCL. We have agreed at 30 crore rupees. The agreement is how much? I have told you I will give you 30 crore rupees. Now have a look at this. As per RBI guidelines, whatever is the agreed value, 15% of it has to be paid up, right, upfront. 15% of it has to be paid upfront. Upfront means what? You take the asset and pay 15% of it. Right? Please do the calculation now. Agreed value is 30 crore rupees and 15% of 30 crore will be how much? 4.5 crore rupees. Any difficulty? Simple calculations. 4.5 crore. So NARCL will pay 4.5 crore rupees upfront and remaining 25.5 crore rupees. Remaining 25.5 crore rupees will be given in the form of security receipt. That is what we are talking about, the last point. Government will be providing guarantees for the 5 years on the security receipts which are issued by the NARCL to the banks. That is, whatever security receipts have been issued by the NARCL for next 5 years, government will provide guarantees to that. Which means if the NARCL is not able to repay, right, that agreed value, then the government will basically provide the guarantees and pay the money. That is basically the concept of fifth point. Done? Right? Again, don't enter into securitization. I know some of you are from the commerce background. Some of you have the expertise in some other area. You'll simply say, sir, but securitization is done. That is done. This is done. Not at all needed for UPSC. You don't have to become an expert. Understand what is the basic process. Right? That is basically the concept of right the NARCL. Now, some of you are asking me, sir, what if agreed value itself is obtained? 30 crore rupees is the agreed value. NARCL will sell and it is able to recover 30 crore rupees. In that case, tell me, does Government of India need to provide any amount to this bank here? Basic idea. Will the government be able to provide, right? Will it need to provide anything to the bank? Of course, no, that is not required. Right? That is basically the concept of NARCL. And this is, right, this has been proposed. This is being implemented. Large value loans are being taken up by NARCL now. Again, right, basically, we are yet to see in real life, in real time, how it is going to work. Because very, very recently, they have started taking up one by one cases. Okay, so this is the discussion regarding NARCL. Now, what are the advantages of this model? Point number one, the stressed assets or non-performing assets will be taken away from the bank and will be given to an expert in the market, bad bank in the market. Don't you think this will reduce the pressure on the banking sector? I understand this will reduce the pressure on the banking sector. And when it reduces the pressure on the banking sector, rather than the banks being focused on resolving NPAs, reducing NPAs in their balance sheet, now the banks can focus on lending activity. Banks can focus on collection of the deposits, etc., etc. The balance sheet of the banks, the assets and liabilities. Do you remember the concept of balance sheet? Last week we have discussed this idea of a balance sheet. Do you remember this or not? In case of balance sheet, we have assets and liabilities. Assets as well as liabilities. Now, when assets become NPAs, when certain loans will become NPAs, can I say the balance sheet of the bank is under pressure? Can you take this balance sheet, go to the market and issue bonds in the market? Think of it. Possible to issue bonds. You can issue, but rate of interest that you have to offer will be more. Don't you think in the balance sheet, if the NPAs are very high, in the stock market, share market, investors will start losing confidence on you. Now, what you have done? You have taken all these NPAs, you have transferred these NPAs to NARCL. Tell me now, will it not clean the balance sheet of the banks? Think of it. Will it not clean the balance sheet of the banks? And now with a cleaner balance sheet, can you borrow from the market? Can you, right, inspire more confidence of the investors? Again, the answer is yes. Right, and second, next one. Initially under the NACR model, the focus will be on large value loans. The NPAs which are larger will focus on that first. Because let me give a very simple example. Right, have a look at this. Imagine example 1. There are 4 loans of 1 crore rupee each. NPAs. There are 4 loans, 1 crore rupee each, which are NPAs. Example 2, there is one loan only whose NPA value is 20 crore rupees. Now, let me ask you a very simple question. Think like an economist. Should you focus on number of loans to be, number of NPAs to be undertaken under NARCL, or should you focus on the value of the loans which are taken up under NARCL? I hope you understand. That focus should not be on number of loans, should be on the value of loans. take up higher value NPAs first, right? Resolve them, then you can take up smaller valued loans, right? So that is the reason higher value loans, which are NPAs of more than 500 crore rupees, first will be resolved, then smaller loans will be taken up. That is some of the, let's say, the advantages associated with NARCL. Having said so, are there any concerns related to the model of NARCL? Point number one, this is basically a reform which is solving a problem. It's a reform which is going to solve the problem. But don't you think there should be more reforms on the other side which will reduce creation of NPS? Let me know if you are unable to grasp this idea. This is a very good reform. Nobody is criticizing this reform as a bad one. But the only problem that I'm saying here is you are trying to resolve a problem. But why are we not implementing reforms using which will reduce creation of NPS? For example, right? Can I give a very simple example so that you understand it? During pandemic times, during COVID times, what would you prefer? Becoming very preventive, precautious, not getting COVID. Think of it. Becoming very precautious, not getting COVID, or getting COVID and then getting treated for it. Right? One is a preventive measure. One is a preventive measure, and the second one is after the fact. After the fact, after you get COVID, there is a solution for this. That is exactly what I'm saying. This NARCL, is it not equivalent to getting COVID and then getting treatment for it? Let me know. Again, don't write this in the exam. Just to make you understand, I'm trying to give you a parallel example. Automatically, all of you will understand. Right? You're getting COVID. You're having NPAs. Then you're introducing a solution, right, to address the issue. But why are we not implementing more and more reforms to ensure that the accounts will not become NPS? The creation of NPS itself will become lower. Right? That is basically the first point. This is a cure. We are talking about cure. But why not implement reforms to prevent itself? That is the first one. And some of you will ask, is it possible? Is it possible to implement reforms in order to reduce the creation of NPS? Of course, yes. Again, all the NPS you cannot prevent, but is it okay? Tell me now, if all the guidelines were implemented, can we have foreseen the crisis in the Kingfisher from the beginning itself? Think of it. If all the guidelines were followed by the banks correctly, if the banks had done correct evaluation, assessment of the company, etc., do you think all the banks would have given 8,000 crore rupees loans to Mr. Vijay Mallya? Of course no. Or else, the one example that I gave you just now, if we implement reforms which will ensure that there is no evergreening of the loans, let me know. If we ensure that there is no evergreening of the loans, don't you think creation of NPS automatically will come down? This is what I'm trying to convey to all of you. Is the logic okay? This is what I'm trying to convey to all of you. So focus more and more on the reforms, implement more and more reforms which will reduce the creation of NPS. Rather than becoming, right, basically a curative measure, focus on prohibitive measures. First one. The government is providing guarantees. The banks may become very much relaxed here. Right? I'll tell you why. Imagine you're a bank manager. You have given loan to a company. Company has not repaid the loan. Now we will hold you accountable. Right? There will be an investigation. On what basis did you provide loans to this borrower, etc., etc. But now government says, don't worry. Even if the loan becomes an NPA and right, NARCL is not able to find sufficient value by selling in the market, I will provide guarantees to that. Now tell me, with so much of cushion provided to the banking sector, will the bank become more proactive? Think of it. Will the bank become very, very proactive? Of course, no. Right? Some of you are saying yes. How? How, my dear? Government says even if the account becomes an NPA and NARCL is also not able to get the right amount in the market, I will provide guarantees. Don't worry. Will you become more proactive? No, you will become more relaxed. Right? There will be a more casual approach towards giving of the loans, etc. That is the second concern. Third one, right? Recovery on the loans. How much recovery we will be able to make? That is also very doubtful, because these are very old NPS. Will there be buyers for these loans in the market, etc.? We need to just see, right? How much will be the recovery? That is also doubtful here. Done. So these are some of the concerns related to functioning of NARCL. Some of the concerns regarding the regarding the functioning of the model of bad bank in India. Done. So this is a discussion, again, a very important current affairs topic. You will not get this in the book, right? Basically a current affairs topic. IBC, I don't think so it is given in the book. NARCL, I don't think so it is given in the book. Read it carefully. Now let me go to the next one. Right, let me go to the next one. Cooperative structures in India. Cooperative banking in India. Let's start. First and foremost, whenever you talk about cooperative, understand the basics here. Whenever you use the term cooperative, what is the meaning of the term cooperative? Cooperative simply means it is a group of 10 people. It is a group of at least 10 people who are above the age of 18 years. Who are above the age of 18 years, and they have come together to achieve a common objective. I'm giving you the definition of cooperative here. I'll repeat it. What do you mean by cooperative? Cooperative basically refers to a group of at least 10 people who are adults above the age of 18 years who have come together to achieve a common objective. This is point number one. Sir, any example of a cooperative? Have you heard of the company Amul? Let me know. And if you say no even now, forget about current affairs. You not even purchased any ice cream in the market. Right? Amul. Right? Or for that matter, Amul versus Nandini. Have you heard of this? Amul versus Nandini. Right? Yes or no? Again, current affairs. Right? Very simple. Current affairs, by the way. Right? Or for that matter, one in Kerala. There is one more cooperative, milk cooperative in Kerala. One more milk cooperative in Tamil Nadu, right? Avin is there, etc., etc. Again, just an example. So have a look at this. Amul is a cooperative. Amul is a cooperative. Have you heard of company IFCO? Have you heard of the company IFCO? Very, very famous, especially related to agriculture sector. Very, very famous. IFCO, it's a fertilizer cooperative. Fertilizer cooperative, right? Later when I discuss subsidies and agriculture, we'll have a discussion regarding fertilizer in India. Problems related to fertilizers, right? That is, let's say there is a solution to the fertilizers. Now we are discussing nano fertilizers. Nano fertilizers in case of India are being developed by IFCO itself. So you can have, right, cooperatives in milk sector, agriculture sector, right, fertilizer sector. There are cooperatives in the sugar sector. There are cooperatives in the housing sector. There are cooperatives in the banking sector, etc., etc., etc. The list will continue. This is the second point. Third point regarding cooperative. Now, whenever you talk about cooperatives, there can be two types of cooperatives. There can be two types of cooperatives. Right? What are the two types of cooperatives? One, which will function in a single state, which will work only in one state. And second, a multi-state cooperative. A multi-state cooperative, right? A single state cooperative or a multi-state cooperative. Now, what is the basic idea here? Whenever you have a single state cooperative, it will come under the regulation of the same state. It will come under the regulation, that is the provisions of the act of same state government. And when you have a multi-state cooperative, that is a cooperative which is present in multiple states, it will come under the regulation of central government provisions. Central government provisions. Right? Very important. Remember this. Central government, right? There are provisions. And right, same state, the single state, there will be multiple provisions, right? So each of the state, they will have their own law. Under the law, they are registered. Okay, now focus on the cooperatives in the banking sector. We are discussing banking, so focus on cooperatives in the banking sector. Cooperatives in the banking sector are divided into two parts. My recommendation, I repeat, my recommendation, by heart this structure. By heart, don't do PhD, simply by heart. The cooperatives are divided into two parts here: urban cooperatives, rural cooperatives. Urban and rural. Urban cooperatives are further divided into two parts: scheduled and non-scheduled. Rural cooperatives are further divided into two parts: they're divided into two parts, that is based on whether these cooperatives will provide short or medium term loans, or long term loans. Will these cooperatives provide short or medium term credit to agriculture sector, or will they provide long term, right, loans to an agriculture sector? So based on this, we will have two divisions in the rural cooperatives: long term as well as short and medium term. Now don't worry about what is long term, sir, what is medium term. It is based on the tenure of the loan. Simple. It is based on for what duration you are giving loans. And I'll tell you what duration, for what purpose they are giving, etc. etc. We'll discuss agriculture loans, not today. Have patience. So based on whether this is for a short term, medium term, we have one structure. If it is for a long term, we have one more structure. In case of the short term, we have, I've written reverse. Let me make a correction. I've written it reverse. Let me make a correction. It has to be short or medium this side and long this side. Okay. So it will be short or medium, and this will be long term. So in case of short term or medium term, we have three classifications again. That is, the cooperatives in a rural part are divided into three layers. At the lowest level, we have primary agriculture credit societies. Please look at this and tell me, can we call primary agriculture credit societies as banks? Can we call this as bank? Let me know. Please look at the slide and tell me, can we refer to the PSE as a bank? Absolutely no. Some of us saying yes. How? It is the term society. Did we not discuss this earlier also? DICGC. DICGC had mentioned it. Primary Agriculture Credit Society. It's a society. It's not a bank. So no, you cannot call this as a bank. But please have a look at this. Above the PSE, we have a district central cooperative bank. We have state cooperative bank. Right? At the highest level, we have state cooperative bank. Whereas in case of long term, we have state cooperative agriculture and a rural development bank. And I'll tell you a trick that I generally use. I generally remember this short form, that is S card B. Is it okay? This is how I remember, right? Entirely left to you. My trick is S card B. That is State Cooperative Agriculture and a Rural Development Bank. And on the other hand, I'll simply remember this P card B. Right? What is the only change? Rather than S, you'll have to replace this with P. Primary Cooperative Agriculture and a Rural Development Bank. Right? This is the trick that I use. If you want to use a different trick, entirely left to you. Right? This is not a compulsion. This is not compulsory for everyone. This is how I remember. You make your own trick. So in case of long term, two layers are there or two tiers are there. In case of short term, three tiers are there. Right? Primary, district and state cooperative bank. And on this side, state cooperative bank, and below that, primary cooperative bank. In case of urban cooperatives, I've given you two classifications here: scheduled and non-scheduled. And further, if you want, they'll be further divided into two more classifications, single state and multi-state. Single state and multi-state, whether the scheduled urban cooperative banks, are they present in only one state or are they present in multiple states? That is basically the concept of right, the classification of cooperatives. Can I go forward? Can I go forward? Remember, please by heart this structure. UPSC has asked questions on this idea as well. Okay, that's a reason. Simply by heart. Now, let me come to certain important concepts related to cooperative banking in India. Right, in 1966, remember there is one act. Very often this will be mentioned, discussed in the current affairs also. Banking Regulation Act. Banking Regulation Act. Very, very important act. Banking Regulation Act of 1949. Okay, Banking Regulation Act of 1949. Now, what is the importance of Banking Regulation Act of 1949? Simple. Whenever you talk about the banking structure in India, if you remember, I'll come back to this slide, slide number 66, I'll come back to this. Please have a look at this structure. Whenever you talk about banking structure in case of India, at the top, there's a term called as commercial bank. Can you see the picture? Right, under RBI, I've simply made one division, that's a commercial bank. Now, what is this commercial bank? If I ask you, how do you define the term commercial bank? Your answer will be now, sir, commercial banks are those which will come under the coverage of Banking Regulation Act of 1949. Any difficulty? Please do let me know. Banking Regulation Act of 1949. Any bank that will come under Banking Regulation Act of 1949, what is the importance of it? Automatically, the powers to regulate this bank will go to RBI. The power to regulate this bank automatically will go to Reserve Bank of India, RBI. Now, please have a look at the structure. Right now, is it okay? Why I've written all the banks under Reserve Bank of India? Please do let me know. Right? Does this structure make sense to you or not? Please do let me know. Right? All these banks, right? Any public sector bank, take up any public sector bank. Will it come under the regulation of RBI? Yes. Why? It is coming under Banking Regulation Act of 1949. Okay. Cooperative banks, will it come under the regulation of RBI? Yes. Again, not directly, because there is one more authority, NABARD. There is one more institution, NABARD. Right. But again, NABARD comes under RBI. Right. So RBI is the most important regulatory authority. Right. Most important regulatory authority for banking sector in India. Now, let me go back to slide number 66. So 1966, what Government of India did was, they amended the Banking Regulation Act of 1949. They made a change in the Regulation Act. And as a result of this, what was the change done? Any cooperative that has, again bank, any cooperative bank that has a paid up share capital of 1 lakh rupee was brought under was brought under the Banking Regulation Act. I'll repeat it again. In 1949, we made a change to Banking Regulation Act. And what was the change? Any cooperative bank that has a paid up share capital, I'll explain it, have patience. Any cooperative bank that has a paid up share capital of more than 1 lakh rupee was automatically brought under Banking Regulation Act. Now, you tell me, when it is brought under the Banking Regulation Act of 1949, does it not mean that automatically it will come under the regulation of RBI? Tell me, if it is brought under the BRA, the Regulation Act, does it not mean that automatically it will come under regulation of RBI? Answer is yes. Okay, now that is the first point. Now, what do you mean by paid up share capital? There's a term called as paid up share capital. I've given the definition here. Let me explain it. Paid up share capital simply means the amount of money that is collected by a company whenever they will issue shares. Now, can I take a current affairs example? Have you heard of Adani company? Yes or no? Anybody in the classroom who says, sir, Adani kya hai? Right? Kya hota hai Adani? Anybody who says that, then I'll simply say, my dear, wake up from your coma. Right? So argument is simple. Have you heard of company Adani? Now, that's a point number one. Point number two, the Adani company has issued shares in the market. Any problem with this? Adani company has issued shares in the market. Now, how they will issue, right? What are the methods? Don't worry about it, right? Just understand the basics. We'll discuss that also in a later chapter. So there is a company which has issued shares in the market and will collect the money by selling shares. Now, this money that is collected by the company by issuing shares, it is called as paid up capital. Any difficulty? Let me know. Any difficulty? A company which will issue shares, sell shares in the market, raise money, right? For example, imagine you are owner of a company. You will sell certain shares to me, right? Me, my friend, others in the market, and whoever has purchased the shares, we will give you money. The money that you have collected by selling the shares to us, that is called as paid up share capital. Now, don't worry about what is the meaning of the share, how they will sell it, why they will sell it, moot point. Irrelevant to the discussion, there will be a point where we'll discuss the idea of a share also. Right? That is a basically idea of a paid up share capital. Now, why this is important? Why this is very important? Understand this very carefully. Until now, there was one issue that faced cooperative banks in India. That was the problem of duality in control. Dual control or dual regulation. The idea of a dual control or dual regulation. What is this idea of a dual regulation? Point number one, I told you cooperative is a group of more than 10 people. 10 or more than 10 people. Let's go point by point. Cooperative is basically a group of 10 or more than 10 people. Now let's say 100 people have come together. They have made a cooperative. Simple. They have started a cooperative. A simple question to you. Do you think all the 100 people will be involved in administration activities of the cooperative? Let me see how you think. Right? Do you think all the 100 people every day, without doing any other work, all of them will come, they'll start taking decisions? No. Why? Please understand this. There is a process of elections which is done in a cooperative. There's a process of elections. If you have not heard of it, if you have not seen it, then just observe it. In Amul, cooperative elections are conducted. Sugar, for example, Maharashtra. This is very, very famous in Maharashtra. Sugar cooperatives, a large number of them are present in Maharashtra. Elections are conducted. Why? All the members of cooperative cannot be involved in administration. So what they will do is, a board will be appointed. A board of directors will be appointed. And for that, elections are conducted. And please remember, next point, the process of conducting elections, management, etc., all of this comes under the purview of Registrar of Cooperative Societies. Registrar of Cooperative Societies. And this Registrar of Cooperative Societies, if it is a single state, if it is a single state cooperative, then the respective state government RCS, I'll start using the short form, then the respective state government's RCS will be responsible for this. If it is a multi-state cooperative, then the central government's RCS will be responsible for this. Now come to the point number 3. Point number 3. Imagine there is a cooperative bank. This is where the complexity will start. Okay. Imagine there is a cooperative bank. Now this cooperative bank, one, it is a society. All of you will agree? It is basically, right, it's a cooperative, let's say registered with the Register of Cooperative of societies, single state. Now, when the register of cooperatives of societies is involved in administration activities, looking after constitution of the board, elections, etc., this board, that is the elected people, now will also be involved in the administration activities of the bank. On the other hand, there is the Reserve Bank of India also, because this is a bank. I have to understand, this is a cooperative bank. And by virtue of being a cooperative bank, don't you think it will also come under the regulation of Reserve Bank of India? Now, can you see two different regulatory authorities for the same cooperative bank? Look at it. Can you see two regulatory authorities for the same cooperative bank? Anybody has a problem with this? Let me know. Anybody has a problem? Can I go to the next point? Why? My dear, that's the reason I'm going point by point. What was the first point? It's a cooperative. Simple. It's a bank, no doubt. It's a cooperative. And by the virtue of being a cooperative, will you not come under regulation of Registrar of State Cooperatives? Anybody has a problem with this? Will you not come under a regulation of Registrar of State Cooperative? Because you are registered with them. So you are under a regulation of one authority. Point number two, because you are a cooperative bank, and cooperative bank are under the Banking Regulation Act. And by the virtue of being in a Banking Regulation Act, will you not come under regulation of RBI? Again, answer is yes. So there are two regulatory authorities. This is nothing but dual regulation, dual control. And tell me, in any case, right, forget about only banking, only one bank, or let's say one institute, two regulatory authorities, will there be efficiency in the system? Do you expect efficiency will be there in the system? No, efficiency will not be there. I'll prove it. How, sir? How efficiency will not be there? Here is elections which are conducted. Here is the election which is conducted. And after the elections is done, chairman is appointed, board is finalized, etc. Now, how many of you are under the impression that after the elections, the members who are there in the board, all of them are experts in the banking sector? Let me know. Right? Is there anyone who believes that these, after the elections is done, the members who are appointed to manage this cooperative bank, will there be experts in this? There may or there may not be. But most of the times, the fact is simple, there are no experts. These are not experts. And I'm pretty sure all of you know why. Elections means, don't you think, politicians will be involved here. Or let's say a politician has very huge power in a particular region, relatives will be made as members. Yes or no? Have you seen this or not? That becomes a problem. Right? These are the people who are elected. They do not have any expertise in the banking sector, and they are collecting money from you. They will have to make decisions to invest in the market. Right? Don't you think because of this, there could be a mismanagement? There could be mismanagement in the bank. Possible? Of course, yes. Instances have already happened. There could be very bad decision making. There could be a lot of corruption in this. Right? Etc. etc. And that is the precise reason the dual regulation was a problem. Right? The dual regulation in the urban cooperative banks or the cooperative banks generally was a problem. So what has been done by the government now? Can I give you an example? Have you heard of Punjab Maharashtra Cooperative Bank? PMC. Very, very famous now. Or infamous. I will understand. Infamous. Punjab Maharashtra Cooperative Bank. One of the largest urban cooperative banks in India. Right? I'm using one more statement. Understand this. One of the largest at that point of time. I believe in 2017 this happened. 2017 or 2018. One of the largest urban cooperative banks in India. One fine day PMC said, we are incurring losses. We will not be able to repay the loans, etc. That becomes a problem. Now, what is the solution to all of this? And that's where Government of India made one more amendment to Banking Regulation Act. Have a look at this. I repeat, Government of India in 2020 made one more change, one more amendment to Banking Regulation Act. Now, what was the changes? What were the important changes that were done? Point number one, we already have board of directors. Have a look at this. We already have board of directors in a cooperative bank. Just like any cooperative, board of directors is already there. But you tell me now, we have discussed this. Do you think board of directors, there will be members who are experts in banking sector? Let me know. Do you think a board of directors, there will be experts in the banking sector? No. Right? There is a possibility that none of them will have any experience in the banking sector. But they are taking decisions. Can we allow that to happen? No. That is the precise reason. Please have a look at this now. Government of India says RBI shall issue directives to every cooperative bank. Every cooperative bank, a new direction shall be issued by RBI. This power is there with RBI. And what RBI says? RBI says, in addition to board of directors, elections will happen, board of directors is there, the chairman is there. In addition to this, there will be one more board within the urban cooperative bank, that is board of management. That is simply board of management. There is board of directors, yes, it is there. But in addition to this, there will also be board of management. And in the board of management, there will be at least 5 members, maximum 12 members. At least 5 members, maximum 12 members. And what is the role of this board of management? The banking related activities, I repeat, the banking related activities of the cooperative bank will come under board of management now. They'll keep on giving recommendation, keep on giving advice to the board of directors how to do the banking activity. That is the role of the board of management. And look at the beauty of board of management. I've not written it. Please understand this carefully. Elections are not conducted here. Elections, no, not for board of management. Appointment have to happen. And if RBI feels, right, this point is important. If RBI feels the board of management appointment is done, but the person doesn't have right expertise, then RBI will simply ask the person to be removed from the board of management. Can I go to the next point? Let me know. Right, the board of directors, elections is there, right? They are taking the decisions, but RBI says to assist them in banking activities, there has to be a board of management. And in the board of management, 5 members, minimum 5, maximum 12 have to be there, and all of them have to be experts. Right? All of them have to be experts. If RBI feels, let's say hypothetically, sir, right, how they will see, etc., etc. Imagine I have been appointed as a member, one of these members in a board of management. RBI simply says, this fellow doesn't have any experience in banking. I hope you understand. This fellow does not have any experience in the banking. Why have you appointed them? Remove. Right? Appoint someone else who has the expert. Okay, so that is basically the board of management. Second, Reserve Bank also has the power or the management of the cooperative banks. How? Appointment of the chairman. Now approval has to come from RBI. Removal as well as the salaries of the MD or CEO, approval has to come from RBI, Reserve Bank of India. Second very important point. Third one, Reserve Bank has the power to supersede the board of directors. Has the power to supersede the board of directors. Supersede means what? Take over the activities. Board of directors are there. They are supposed to manage the bank. But if RBI feels they are not doing the work correctly, they are not doing the work properly, then RBI simply says, all of you go home. I will appoint somebody else to manage the cooperative bank. Any problem with the point number 3? Fourth one, under the new law, under the latest provision, now the banks will have the power to go to the market, issue shares, issue bonds, and raise money, collect the capital. And please read the statement. Please read the statement. Many of you will start typing what do you mean by share. We'll discuss that. Bond, we have already discussed it. The Reserve Bank also has the power to sanction voluntary or compulsory amalgamation. Amalgamation means merger. Okay. It has the powers to have a compulsory merger of these cooperative banks. Why? RBI feels they are not working correctly. So why have different cooperatives? Both are not working correctly. Let's merge both of them. That power is there with RBI, Reserve Bank of India. Any problem in any of these provisions, let me know. I'll show a current affairs article now. Any problem in any of the points? Second point, I'll repeat it for the third time now. Board of directors is there. In addition to board of directors, one more board has to be appointed. Underline the term appointed by the bank. In that board, minimum 5 people, maximum 12 people have to be there. All of them have to be experts. Point number 1, the MD's, CEO's salary. Now the approval has to come from RBI. Right, the remuneration that is paid, RBI has to give the approval to that. Now regarding this, I'll come back to 68th slide. Please have a look at this article. Please have a look at this article. Right, which article, sir? By the way, I'm talking about this article. First article. Can you see the red marker now? Can you see the red marker? Let me know. Right, the first article. And just glance through that. You will see certain very important points. Whatever we are discussing, it is there here. And by the way, this appeared in Saturday's newspaper. Saturday's newspaper. Reserve Bank of India has a sanctioned voluntary scheme of amalgamation of Mumbai-based Maratha Sahakari Bank with Pune-based Cosmos Cooperative Bank. Right? What did we discuss? Last point, was it not the same thing? Was it not the same thing? The scheme has been sanctioned in exercise of the powers conferred under subsection 4 of section 44A, read with section 56 of the Banking Regulation Act 1949. This is the reason I keep on asking you people to read newspapers. Simple. This is the reason, right? I've been asking you, right? Advising you to read newspapers. If you don't read newspapers, you feel everything is hypothetical. No use of all of these articles. No use of all of these points. If you're reading newspaper, you'll be able to connect all the dots. Done? So this is there in the newspaper. That's the reason. Please develop this habit of reading newspapers. So these are certain very important changes that have been introduced by Government of India by amending Banking Regulation Act of 1949, giving more powers to RBI to regulate the cooperative banks. And the whole idea is very simple here. Whole idea is very simple. The cooperative banks are not like any other institution. Understand the difference. Many of you simply say, right, and in fact, two of you are asking, is it not that the powers are being taken away? My dear, please understand, a milk cooperative, right, or let's say a sugar cooperative, don't you think whatever cooperative I put on one side, in terms of functioning, it is completely different compared to a bank cooperative? Think of it. Is it not completely different compared to a bank cooperative? That is, in case of milk cooperative, board of directors, is their election happens, they will have to take decisions, etc. But in case of a bank cooperative, people's money is involved. Right? It's not a bank, let's say an urban cooperative bank. It is not a bank only for the members. It is a bank for you. It is a bank for me. Can I open a savings bank account? Can I keep a fixed deposit with any urban cooperative bank? Of course, yes, they will welcome me. They will, of course, welcome me. And in fact, if you know the fact, this is very simple. People tend to keep a lot of money in cooperative banks, especially urban cooperative banks. Reason is simple. They offer a higher rate of interest. Compared to a public sector bank, these offer a slightly higher rate of interest. people looking at a higher rate of interest will run behind a higher rate of interest, keep money in these cooperatives, right? And now have a look at it. If the board of directors, right, if there are no right experts in the board of directors, can there be a mismanagement of your funds? Can you end up losing all your money in the Punjab as it happened in the PMC? Of course, yes. Right? Again, is there a recourse for it? Is there any temporary relief to it? Of course, yes. There is a DICGC. I hope you understand. There is DICGC. Temporary relief is there. But again, don't you think the whole argument DICGC is a cure? I hope you understand. DICGC is a cure. Why are we looking at cure? Why not ensure that cooperatives will function in a much efficient manner without right mismanagement? That is where these powers which are given to Reserve Bank of India will come into hand. Right? These are the important powers which have been given to RBI, right, to basically look after effective, efficient functioning of cooperative banking in India. Can I go to the next one? Any difficulty? Can I go to the next one? In fact, this question was asked by UPSC. Right? This question was asked by UPSC. We'll have a discussion on questions tomorrow. Don't worry. Okay. So the last concept for today, again, not in banking, some more are there, then we'll be done with banking. The idea of a RRB, a regional rural bank. Now, what is this concept of RRB? Right? Understand this carefully. Please travel back. Travel back. Imagine, go back in the history, go back to 1970s. Go back to 1970s. During 1970s, lot of problems were there in rural part of India. What kind of problems? The agriculture sector, the farmers wanted to take a loan and invest, cultivate more crops. Now tell me, were there sufficient number of banks in villages at that point of time? Again, I hope you understand. I'm asking you to go back in 1970. In fact, even today, if you're reading newspaper, you would have come across one article, I believe 1.5 months ago. Have you seen that photo? Where an old woman, very, very old woman, is taking a chair. With the support of the chair, the woman has gone to the bank to withdraw pension. Have you seen that article? If not, check it. Finance minister, nobody lesser than finance minister reacted to that news. Finance minister said, be humane first. Right? If you have not seen it, check it. Again, what I'm trying to convey is very simple point here. Even today, all the villages in India do not have a banking branch in a vicinity of 5 kilometers. I'll repeat the statement here. Even today, right, 75 years of independence, etc., whatever it is, even today, all the villages in vicinity, in a radius of 5 kilometers, all the villages do not have a banking branch. And in fact, right, that is the goal of Government of India. Right? In fact, that is the goal of Government of India. Government of India says, I want to ensure that, right, every village in the radius of 5 kilometers will have a banking branch. And I am telling you, go back to 1970s. So you can imagine. So agriculture, right, a sector, they wanted to borrow loans, right, but the banks were not available. The small, right, let's say industries, they wanted to take a loan, right, increase the production, etc. They were not able to get access to institutional loans. Now, looking after all of this, there was one proposal given, a model of regional rural banks. The model of regional rural banks was proposed by Narasimham Committee. And based on the recommendations of Narasimham Committee, Government of India passed RRB Act, Regional Rural Bank Act, and we started establishing the models of regional rural banks. Now understand a very important point, then we'll stop the discussion. We'll discuss this tomorrow. Unlike any scheduled commercial bank, other scheduled commercial banks, for example, you can take, let's say, SBI. Is it fair if I say SBI is present throughout India? Let me know. The branches of SBI are present throughout India. For that matter, take up any public sector bank or private sector bank. Right? Some of you are saying no, throughout India means, again, the spread is there. Right? In every state, every district, you will find SBI. That is what I'm trying to convey here. What about many other public sector banks, private sector banks? These are present, right, spread throughout India. These are present in large number of states. But what about villages? What about presence of these banks within the villages? Their focus is generally on cities, bigger cities, taluks, etc., district level. What about the villages? And that is the reason we started promoting the concept of RRB. Because I'll stop with the last point here. The concept of RRB was that these bank branches will be present in only one or two districts. That's it. Remember this. The concept of RRB is that these bank branches will be present only in one or two districts. SBI is it present in only one or two districts? Throughout all the districts in India. Right? What about private sector bank? Throughout all districts. But RRB's condition was that you will have to open your branches only in one or two districts. And both of these districts, imagine you have opened in two districts, both of these two districts should be neighboring to each other. They'll use the term contiguous, right? Meaning what? Both of them are connected to each other, right? So that was the basic modus operandi that we used in the concept of RRBs. Done? So let me stop the discussion today here. We'll continue the discussion regarding RRBs tomorrow. Now, if you have any kind of questions, please raise it to me so that I can address the questions and then we can stop the discussion. These cooperatives follows monetary policy or not? Of course, yes. You tell me, if they come under the regulation of RBI, if they are coming under the regulation of RBI, should they follow monetary policy or not? You already know the answer. Okay. And by the way, right, even if you don't know, yes, they are supposed to follow. Share was anyways a cooperative bank. Okay. Share was anyways cooperative bank able to issue. How does amending regulation bank differs from previous situation? Until the previous situation, the shareholders, the contributors were the shareholders. I understand. My statement is simple. Understand this. In a cooperative bank, imagine 100 people come together and start a cooperative. These 100 people are the original shareholders. Now, these cooperative banks will be allowed to go to the stock market, issue shares, issue bonds, and raise capital. That is the new power which has been given. Of course, they will have to take the approval of Reserve Bank of India. How board of management members are selected? RBI has put certain criteria. There are certain criteria. Again, you don't worry about it. For example, the board of management member should be an expert in the agriculture credit, should be at least an expert, should have expertise in lending activity, in financial institutions. These kind of conditions are imposed by RBI. Only abiding by those conditions, you are allowed to appoint people into board of management. Cooperative bank board will regulate how to grow while RBI manages intern of economy and people money is safe. How there's a conflict of interest? Okay, that's what I'm saying. The board of directors may or may not have any kind of banking experts. And trust me, if you don't trust me, please check what kind of members are present in different cooperatives. Check what are the members in sugar cooperatives. Again, don't make it political, just to make you understand the point. Right? There are multiple sugar cooperatives in Maharashtra. Please check. In fact, if you read about evolution, again, not required for UPSC, truly not at all required for UPSC. Many of these, the very, very big status ministers of the government, many of them are actually coming from cooperatives itself. Is it okay? Many of the ministers started working at the cooperative level. Many of them started working at the campus level. And over a period of time, they have grown in stature and they are ministers at the central level now. Again, not required. Okay. So argument is simple. Cooperative banks, the board of directors are there. They may or may not have expertise. If they do not have expertise, then how can they manage your money, customers' money? So we will introduce a board of management which is consisting of experts. Okay. What if realized amount is more? Generally, you will not have it. If there is an example, please do let me know. You will never have it, my dear. You will never have it. Why? A non-performing asset. Do you think people will run after the non-performing asset to purchase, thereby appreciating the value of that? Think of it. Let me know. Does it make sense to you? It will not happen, right? Most of the value that will be realized will be lesser than actually the assigned value. What is the point of NARCL when there is any IDRC? Initially, to begin with, we actually proposed only NARCL, but please understand there are certain laws. RBI said NARCL cannot be the same authority which will purchase as well as sell. I'll repeat it. RBI said only one authority cannot purchase and sell the asset like this as per one of the provisions of the Act. And that is a precise reason IDRC was not initially proposed. Only NARCL was proposed. In addition to NARCL, we introduced one more authority, IDRC. Now, NARCL will purchase, IDRC will sell. That's a basic idea. Okay. You're making earlier weekly current affairs economy. Can you do that again? That's very hectic. The classes are there, etc. That's a reason. Apart from that, just to provide you on day-to-day basis, right? Weekly 3 or 4 videos we are uploading from economy. How to evolve a strategy for new pattern? My recommendation is whenever you read, that's the reason I keep on telling the students, focus on the concept. Don't focus on calculation. Don't focus on unnecessary things. Focus on the concept. If you can understand the concept, more than sufficient. Why debtor will approach NCLT? The debtor will simply approach NCLT because the company feels there is no point in continuing functioning. There is no way they'll be able to repay the loan. They will approach NCLT. And there have been examples for that also. Okay. Done? Will the same pattern follow next year? That you will have to ask UPSC. Neither do have any answer, nor anybody else will have the answer to that. UPSC entirely depends upon UPSC. How dual control leads to inefficiency? Again, same thing again and again. I said a board of directors may or may not have experts in the banks. These are not banking experts. How will they manage your money then? Right? Tell me, will you give money to somebody else to manage who doesn't have any knowledge about banking? That's the reason, my dear. Which newspaper should I follow? My recommendation is read any one additional business newspaper. Again, there is no fixed business newspaper. Choose one. Your choice. Every business newspaper is good. Fourth point in recent changes. Right? There's a fourth point. As per the new changes that has been introduced, cooperative banks now are allowed to go to market, issue shares, issue bonds, and collect the money. Capital can be raised. Okay, anything else? Let me know. Supersede. What is the meaning of the term supersede? Superseding means overtaking. Superseding is nothing but overtaking. That is, imagine your RBI, right? I am a cooperative bank. There is a board of directors. Board of directors are performing their duty, but whatever they are doing, the cooperative bank is not functioning well. In such cases, RBI can simply say, the board of directors, you don't have to take any decisions now. I will take up the decision making. That is, RBI will appoint somebody else who will take over the management of the cooperative bank. That is called a superseding of board. Okay. How to calculate quickly? Again, it's just a practice. Practice. More you practice, more efficient you will become. Okay. Anything else? Economic questions are more newspaper articles oriented. You tell me. My assessment says yes. Right? I'll tell you my assessment. Again, that doesn't mean that no questions have come from the static source. Absolutely no. Right? If you check the paper, there was a question on PSL. Right? The PSL loans which are given to MSMEs, right? The loans which are given to MSMEs are classified under PSL. Did we not discuss that? Think of it. Did we not discuss the idea of MSME loans under the category of PSL? That is under RBI functioning. We have discussed. Please check the list. You'll understand. Okay, done. So we'll stop the discussion today here. We'll continue tomorrow. Take care. See you again tomorrow evening, sharp at 5 p.m. Good night.